Very good morning. So let us continue our discussion with respect to allowance. I'll do a small recap for allowance. Uh, Allowance is what? It is nothing but fixed amount of money given by employer to employee either for meeting some personal expenses or for meeting some official expenses. Allowance is fixed amount of money given by employer to employee either for meeting personal expenses or for meeting official expenses. This allowance can be divided into different categories based on the purpose for which they are given. Number one, based on purpose for which the allowance is given, we can classify the allowance into two categories. Number one, allowance given for official purpose, and number two, allowance given for personal purpose. Same allowance based on the taxability can be classified into three categories: fully taxable allowance, partly taxable, partly exempt allowance, and fully exempt allowance. Fully taxable allowance means the entire amount will be added to employee's income. Partly taxable, partly exempt allowance means part amount will be added to employee's income and part amount will be ignored. That is, part amount will be exempted from tax. And the third one is fully exempt allowance. Fully exempt allowance means that is not taxable at all. It will not be included in employee's salary income. These things we had discussed, and then we moved on to discuss different allowances. If you recollect, we moved on to third category, that is fully exempt allowance. In that fully exempt allowance, the first point is daily allowance or constituency allowance received by MP MLA. Member of Parliament and member of legislative assemblies would receive some fixed amount of money for only those days for which they are attending the Parliament and state legislative assemblies. Because from different parts of the country, different parts of the state, they have to go to a particular central location to attend the Parliament or to attend the state legislative assemblies. So they would receive some fixed amount of money for spending, for traveling, for food, for stay, etc. They are going to spend some fixed amount of money. For that, government will give them fixed amount of money, that is called as daily allowance or constituency allowance. That is totally exempt from tax because government believes that it is entirely spent and nothing is saved. Number two is allowance received by judges of High Court and Supreme Court. Whatever allowance the judges of High Court and Supreme Court would receive, all allowance are not exempt. I'm just talking about, here we are just talking about one allowance, that is called as sumptuary allowance. That is called as what? Sumptuary allowance. See, sumptuary allowance is also called as entertainment allowance, which I have not explained you till now. When we move on to the first category, that is fully taxable allowance, at that point of time, I'll explain you. But you can understand that sumptuary allowance is an entertainment allowance. sumptuary, sumptuary. So, this sumptuary allowance which is received by the judges of High Court and Supreme Court is totally exempt from tax. Then we have the last one, point number 3, which we have already discussed in the chapter of residential status and scope of total income, section 9. Any allowance given by Government of India to government employee rendering services outside India, allowance as well as perquisites given outside India would be totally exempt from tax in section 10 clause 7. But yes, salary paid to such an employee outside India will be deemed to accrue or arise in India and it will become taxable in India. So this is what we had discussed yesterday. Now friends, we are moving on to second category, that is partly taxable and partly exempt category. Partly taxable and partly exempt category. In that we have three categories: category A, category B, category C. Category A are those allowances which are given for official purposes. Category A are those allowances which are given for official purposes. So whatever amount you receive from your employer is your income. Whatever allowance you receive from your employer should be considered as your income. Number two, out of that you will get certain amount of exemption. Out of that you will get certain amount of exemption. So from the amount received, from the income received, certain amount will be exempted, that you have to deduct, and balance amount will be taxable. Balance amount will be taxable. Now the point is, point number one, whatever you have received from your employer, that is your income. From that, you have to deduct the exemption. After you deduct the exemption, the balance amount is taxable. Now the point is, how much is taxable? How much is, sorry, uh, point is how much is exempt? How much amount is exempt from tax? So we say that exemption is lower of following two amounts. Exemption is lower of following two amounts. Number one is amount received and number two is amount spent. Number one is what? Amount received and number two is amount spent. First of all, you see what is the amount received, then you see what is the amount spent, you write both, then you select whichever is lower. Whichever is lower would be considered as your exemption. So that amount will be exempted from tax. On that amount, tax will not be levied. So you remove that exemption from the amount received and balance will be taxable amount. For example, here we have the list of 6 allowances. First of them is uniform allowance. First of them is what? Uniform allowance. See, uniform allowance will be received by those employees who are required to wear uniform on duties. Say for example, someone is working as an security guard or maybe army, navy, air force, or someone is working as a officer in say for example galleries. There is a Vodafone gallery, na? In Vodafone gallery there might be a representative. So those people are wearing uniform. Same color shirts they are wearing, same color trousers they are wearing. So on duty they are expected to wear uniform. Pilots are also expected to wear uniform. Army, Navy, Air Force people are also expected to wear uniform. So they may get something called as uniform allowance. This uniform allowance falls into category A. This is given for official purpose. So I told you that lower of amount received and amount spent will be exempt from tax. Let us try to understand this with the help of an example. Now I have two examples in front of you. Both are pertaining to uniform allowance only. So first example says, you have received an amount of 10,000 from your employer as uniform allowance. You have received how much? You have received an amount of 10,000 from your employer as uniform allowance. Now from this, how much will be exempt from tax? Exemption is lower of following two amounts. Number one is amount received. So amount received is nothing but 10,000 only. Why one of the amount is amount received? Because the amount of exemption cannot exceed your income. If you have received 10,000, you can't say that my exemption is 12,000. Your exemption can be maximum up to your income only. So one of the amount, whenever you calculate any exemption, one of the amount would be amount received. So here point A is amount received and point B we are asking you, you had received 10,000 from your employer for getting the uniform stitched or purchasing the uniform. How much did you spend? So employee says I have spent 6,000 rupees. So what will be exempted from tax is 10 or 6, whichever is lower. So 6 is exempted from tax. So let us deduct this amount of 6,000 from the amount received. So what is taxable? 4,000 is taxable. 4,000 is taxable. Have you understood this example number 1 very clearly? Yes? Yes or no? Yes, okay. Similar example, same example, slide change. With slide change, I am taking the same example. Example number 2, uniform allowance received is 10,000. Exemption under section 10 clause 14 is lower of following two amounts. Number 1, amount received 10,000 and number 2, we ask the employee how much amount you have spent. So he says I have spent 12,000 rupees. Then we'll ask him, how did you spend 10,000? Employer gave you only, how did you spend 12,000? Employer gave you only 10,000, na? Then how did you spend 12,000? He says 2,000 I have spent from my own pocket. Because if I would, with the help of that 12,000, I got an excellent quality material. So I spent 2,000 from my own pocket. So amount spent is 12,000. How much will be exemption in this case? Your exemption cannot exceed your income. How much is your income in this case? 10,000 rupees. So your exemption cannot be more than 10,000. So 10,000 or 12,000, whichever is lower. 10,000 is lower. So that is exempted. What is taxable is 0. If you refer both the examples, Deva is saying that, sir, whether 4,000 is required to be refunded to the employer? Answer is no. Allowance means employer will give you that same amount, employer will give you some amount of money for a particular purpose. You spend that money. If you have not spent, that will become taxable. It is not required to be refunded to the employer. He is giving you some amount, fixed amount of money. Is that very clear? Deva? Okay. Now, if you refer to example number 1 and example number 2 both, then we can conclude that whatever amount employer has given you, that is your income. And whatever you are spending, that is exempted from tax. Whatever you are saving, that is taxable. If you save something, it is taxable. Why na? Because employer did not give you money for saving. He gave you money for spending. So you spend money, will exempt you. If you save, amount saved will become taxable. Is that very, very clear? Okay. Now listen to me carefully. Deva asked me one of the questions saying that whether 4,000 is required to be refunded or not. For that I am taking up one point. See, there is something called as reimbursement. And there is something called as allowance. What do you mean by reimbursement? Reimbursement means employee will spend money out of his own pocket. Employee will spend money out of his own pocket. Yes, excess amount is taxable in the hands of employee. Yes, definitely it is taxable. So reimbursement means employee will spend money out of his own pocket and employer will give back same amount to employee. Say for example, I am working as an employee of Inside Commerce Studies. For official purpose, I have spent 10,000 from my own pocket, and Inside Commerce Studies is giving back that 10,000 to me. That is called as reimbursement. So first of all, employee is spending from his own pocket. Thereafter, employer is giving back same amount of money to employee. That is called as reimbursement. See friends, practically, when people know that employer is going to give back same amount of money or employer is going to reimburse the entire amount of money, in that case, people tend to spend more money. You know that this will be reimbursed to me from my office. Whatever I spend, my employer is going to reimburse. So, in that case, employee tend to spend more amount of money. So, he will not try to save, he will try to spend. Therefore, in certain organizations, instead of reimbursement policy, they would adopt an allowance policy. See, in case of reimbursement, employee will spend money he will have to maintain the records. He has to maintain the bill also. He has to submit all this bill and records to the cashier. And then cashier will reimburse that amount to employee. And then cashier will maintain the records for audit, accounting purpose, etc. So your employee tend to spend more because company is going to reimburse the entire amount. So company is at a losing end because employee will intentionally spend more money. So in certain cases, instead of adopting reimbursement policy, employer may adopt allowance policy. In allowance policy, employer will give fixed amount of money to employee. Now he may spend more, he may spend less, he may spend the same amount. Employer is not concerned with it, and employer will not demand the evidence. He will not demand the proof. So fixed amount of money is given to employee. He may spend more, he may spend less, he may spend the same amount, and explanation or proof will not be demanded from the employee. That is called as allowance. So fixed amount of money is given to employee. Fixed amount. Actual spending spending can be more than that, less than that, or it can be equal to that. If you spend more, if you spend extra out of your own pocket, employer is not going to give you that amount back. If you spend less, you have saved something, employer is not going to take back that amount. So allowance is fixed amount of money given by employer to employee. He will not demand any explanation from you. He will not demand the money saved from you. And if you spend something out of your own pocket, he is not going to pay that amount. Is that very, very clear? Petty cash is reimbursement. Petty cash is nothing but reimbursement. You spend money out of your own pocket, then you go to the office, submit the evidences, and then employer will reimburse that amount out of petty cash. Is that very clear? So yes, there is a difference between reimbursement and allowance. So allowance is fixed amount of money. If you save something, that is going to become taxable in case of first category. So in first category, that is category A, the first allowance is uniform allowance. First allowance is uniform allowance. Have you understood this rule? Category A very clearly. Whatever you save is taxable. Whatever you spend is exempt. Exemption is lower of amount received and amount spent. So first in that is uniform allowance. Second is traveling allowance. Second is what? Second is traveling allowance. See, in traveling allowance, you can just write there, in traveling allowance, we can have two things. Number one, we can have tour allowance. And number two, we can have transfer allowance. Tour allowance means when you are on an official tour, employer is giving you some amount of money for that long journey traveling. Say for example, in Mumbai also we have Inside Commerce Studies, and I am working as an employee of Inside Commerce Studies, and Inside Commerce Studies is situated in 5 different locations. And I am here in Chennai for my official tour. So I am going to spend some money for traveling purposes from Mumbai to Chennai and from Chennai to Mumbai back. For compensating that traveling cost of long journey traveling for official purposes, employer may give me something called as tour allowance. Which tour it is? Official tour. Or maybe for example, Have you understood tour allowance? Tour allowance means given by employer to employee for which purpose? Official purpose. Since employee is going to go on an official tour, employer is giving a fixed amount of money for compensating which cost? Traveling cost. It is a long journey traveling for official purpose. Now another one is transfer allowance. Now say for example, inside commerce, I actually reside at Mumbai. My house is at Mumbai. I reside at Mumbai. Now inside commerce stories, they went through my information data as to I am taking lectures in which city for how many days. And they came to know that out of 12 months, 9 months I am in Chennai only, 9 to 10 months. So they said me, sir, from Mumbai to Chennai you travel again and again very frequently. So why unnecessarily you are traveling to Chennai again and again? Instead do one thing. You get yourself shifted here only in Chennai. We will transfer your job location. So instead of Mumbai, you stay in Chennai. And whenever the need arises, you go to Mumbai. So my job location is transferred from one place to another. You might be knowing that in case of government and semi-government jobs are transferable after every 2-3 years. You are being transferred from one location to another. All the IAS officers are being transferred every 2 years. So, if your job location is transferred from one place to another, then you have to get yourself shifted. So, you have to shift your personal belongings also. All household things, all personal belongings are required to be shifted from one place to another because your job location is transferred for a longer span of time. So, you tend to spend money on shifting your personal belongings from your old job location to the new job location. So whatever money you spent on shifting your personal belonging from old job location to new job location, to compensate that amount, employer may give you something called as transfer allowance. He may give you something called as transfer allowance. So in the traveling allowance, we have two allowances, tour allowance and transfer allowance. Why tour allowance is given? To compensate the cost of traveling, compensate the cost of which traveling? Long distance traveling. For which purpose? Official purpose. And why transfer allowance is given? To compensate the cost incurred by employee for shifting his personal belonging from old job location to the new job location in case of transfer of employee's job location. Is that very, very clear? Yes or no? Second point, have you understood the meaning? Yes. Now, let me tell you the exemption rules are same. Exemption rules are same. In other words, exemption would be lower of amount received and amount spent. In simplified language, whatever you spend is exempted, whatever you save is taxable. If you save something, that amount will become taxable. Next is daily allowance. Next one is what? Next one is daily allowance. What do you mean by daily allowance? Daily allowance is generally received by those people who are working in marketing or sales team because they are far away from their official place of duty and they are far away from their residence also. For example, you are an accountant, so you have to go to the office in the morning and stay in the office throughout the day. So, you may carry a lunch box along with you in the office and the lunch time will have your lunch from that lunch box. But a person who is working in a sales team or a marketing team, he cannot carry the lunch box. Where he will have? Because he is always on the field. He is always working on the field. So, he tend to spend more money on a daily basis. He tend to spend more money for having food outside. He may have his breakfast outside. He may have his lunch outside, tea, coffee, snacks, etc. So he tend to spend more money because he is always on a field. Therefore, employer may give some extra allowance to compensate that daily small expenses cost, and that is called as daily allowance. Those people who are working in the sales team, they are expected to submit a DSR report, daily sales report. And for For the number of days for which you have submitted the daily sales report, now only for those number of days you are going to get you are going to get the daily allowance. So daily allowance is given generally to those people who are far away from their residence and they are also far away from their official place of duty. So they tend to spend more amount of money from their own pocket for their personal purposes. So to compensate that, daily allowance is given. Have you understood this daily allowance? Yes or no? Let's move on to next, helper allowance. Say for example, Manoj completed his chartered accountancy and he has joined as an employee of some multinational company. The offer letter which was given to him clearly mentioned that your job timings will be 10 to 6. But from the day he has joined the office, he has never left the office at 6 o'clock. Every day he is required to work up to 8, 8:30, etc. So, just after working for 5, 6 months, he got fed up, saying that I am earning money for what? If I don't have the time to spend money and if I don't have the time to spend with my family, for what purpose I am living life? Such a life I cannot live for a very, very long span of time. So, he decided to resign. He decided to resign. Rizwan, don't worry, I'll come back to that point. So, he decided to resign. And he has resigned from the employment. Generally, when you resign from any organization, they would conduct an exit interview. Exit interview means before you leave the organization, you have to give the interview. So HR team is taking the interview and HR team official is asking Manoj, why you are leaving the job? So Manoj says my official timing for the job is 10 to 6. But every day I am expected to work up to 8:30 p.m. So why I am putting 2.5 hours extra every day? If I stay in office throughout the day, when I'll go home, when I'll have some time with my family, so I cannot afford to have this life. That is the reason I'm leaving. Now say for example, Manoj was a excellent employee in the organization. His performance was excellent. So company decided that we don't want to lose such an employee. So company came out with an idea saying that Manoj, you do one thing, you don't resign and you work in the organization, we will allow you to leave the organization by 6 o'clock. So you come to the office at 10 o'clock, you leave sharp at 6 o'clock and whatever extra work is there now, which will not be in a position to do because you are leaving at 6 o'clock. That work is also required to be done. So what we will do now? We will give you 10,000 rupees per month extra. Every month we will give you 10,000 extra. What do you do with that 10,000 now? Once in a week, maybe on Saturday, when you come to office, you find out some person, some of your friend who are ready to work. Call him to office for one day in a week and you pay him some amount of money. Company cannot afford an extra employee because that 2 hours extra work now. For that company cannot afford an extra employee, company cannot afford to pay salary to one more employee. So we are giving you 10,000 rupees. You ask any of your friend to come to our office and work for one day in a week and out of that 10,000, you pay whatever amount you want to pay to him. So company has found out some midway wherein company says that you work till 6 p.m. Now we will give you extra money 10,000 rupees as a helper allowance. So what do? You appoint someone who you are knowing, maybe your friend, ask him to come to our office for one day in week along with you and you get the work done of that entire week. Now whatever work is not done, you get that work done from him. And out of 10,000, you pay whatever amount you want to pay to him. This is which allowance? Helper allowance. So with the help of that money, you are going to appoint a helper for you for the official purposes. Is that very clear? Yes. Rizwan, daily allowance means what now? Daily allowance means this is given to those employees who are working either in sales team or marketing team. they are far away from their residence. When they are performing their jobs, they are far away from their residence, they are far away from their official place of duty, they are far away from their office. So they tend to spend more money on small expenses like having breakfast, having lunch, having snacks, etc. They tend to spend more money on that, because if you have food outside, you'll have to spend more. If you are having your homemade food, then the quality is also good and the price is also less, cost is also less. But if you have food outside, you'll have to spend more money. So to compensate those small daily expenses, your employer may give you something called as daily allowance. Is that very clear, Rizwan? Next point number E is academic allowance. No one is going to ask you the meaning of this allowance. Huh? You have to just remember they belong to which category and you should know how to calculate the exemption. That's all. Academic allowance is given to teachers because they, other than teaching, they do a lot of academic work like taking the attendance in the classroom, maintaining the attendance records, making the question paper, checking the answer sheets, making the mark sheets. So they are doing a lot of academic work other than teaching also. So for them, to them, employer may give them something called as academic allowance. Next is research allowance. Research allowance is given generally to those people who are engaged in research. For example, Serum Institute of India, Bharat Biotech might have given research allowance to their employees for doing research for COVID-19 vaccine. So that is a research allowance given by the employer to the employee who are engaged in research. Last is conveyance allowance. See, in point number B, we saw traveling allowance. And point number F is conveyance allowance. What is the difference? Traveling allowance is long journey traveling, long distance traveling from one city to another for official purpose. And this conveyance allowance is also for traveling only. It is also for official purpose only, but it is within the same city. It is within the same city. So here if you want, you can write within the same city. Within the same city. So if you are incurring some traveling cost for traveling within the same city for official purpose, then employer may give you some amount of money for compensating that cost, and that will be termed as conveyance allowance. Yes, have you understood this very clearly? Category A. Shall I move on to next category? Okay, next category is allowance given for personal purpose. Allowance given for personal purpose. Here the exemption rules are slightly different. Exemption is lower of following two amounts. Number one is same, amount received. And number two, instead of amount spent, it is amount specified. Amount specified means we will let you know the amount. Amount specified means we will let you know what is that amount specified. So, first of all, category B allowance is given for which purpose? Personal purpose. What is the exemption? Exemption is lower of following two amounts. Number one is amount received and number two is amount specified. Amount specified means amount is notified by the government. In the Income Tax Act itself, amount is notified by government. So whatever is lower of amount received and amount specified, that would be exempted from tax. And once you deduct the exemption amount, balance amount would become taxable. So you have to follow the same procedure, just that instead of amount spent, it is amount specified. Now let us have a look at the examples. First one is children education allowance. First one is what? Children education allowance. What is the amount specified? 100 rupees per month per child, that too for maximum 2 children. See, government is not saying that you can have only 2 children. How many children you can have, it all depends upon your own capacity. You can have more number of children depending upon you. Your employer may also give you allowance for more number of children, but government says we will give you exemption only for 2 children. In other words, if you are having 5 children and you are receiving children education allowance from your employer for 5 children. Government says we will give you exemption only for 2 children. Remaining 3 children, whatever amount you received now, that will become fully taxable. So children education allowance. Amount specified is how much? 100 rupees per month per child. That too for maximum how many children? 2 children. Let us try to take an example. Let's take an example. See this. Example number 3. What it says? Mr. X received a children education allowance at the rate of 500 per month per child for 6 children. So Mr. X is having 6 children and is receiving 500 rupees per month per child. So how much amount is going to receive? He is receiving 500 per month per child. So for one child, for 1 month, he is receiving 500. Per month he is receiving 500. So yearly amount would be how much? 6,000. That is for one child. So he is having how many children? 6 children. So he would receive how much? 36,000. He has received 36,000. Now from that 36,000, what is exempt? Lower of amount received, amount specified. So what you have to do now? You have to ascertain amount received per month per child. You have to ascertain amount received per month per child. In this example, what is amount received per month per child? Amount received per month per child is how much in this case? 500. 500. And government has specified some amount, na? Amount specified per month per child. How much that is? 100. So amount received per month per child is 500. Amount spent per month per child is 100. What is lower out of these two? Amount received per month per child is 500. Amount specified per month per child is 100. What is lower out of 200? So you calculate exemption based on 100. You calculate exemption based on 100. 100 multiplied by 12 months, multiplied by 2 children. That will give you how much? 2,400. So that 2,400 will be exempt. Balance 33,600 will be taxable. So I am once again repeating. I am repeating a procedure for you. Step 1, you find out amount received per month per child. Then you see what is amount spent per month per child. Sorry, amount specified per month per child. Again and again, instead of word specified, I am using the word spent mistakenly. Here the exemption is lower of amount received and amount specified. So step 1, you calculate what is amount received per month per child. Then you see what is the amount specified per month per child. Then you select whichever is lower out of 2 and then you calculate the amount of exemption. So this example number 3 is clear to each one of you, right? Can you see example number 4? Example number 4. Is it clearly appearing on the screen? No. No, only question should appear. Solution should not appear. Are you in a position to see the question? That's all. So example number 4 says, Mr. X received children education allowance at the rate of 500 per month for 6 children. Mr. X received children education allowance at the rate of 500 rupees per month for 6 children. Now tell me, what is the amount received here? How much will be the amount received? Mr. X received children education allowance at the rate of 500 rupees per month for 6 children. What will be the amount received? Do you believe that it will be 36,000 rupees? It can't be 36 because this time they are not using the word Darshini. It can't be 36,000. Because in this example, they are not using the word per child. So 500 rupees is not per month per child. 500 rupees is not received for each and every child. 500 rupees is received for all the 6 children combined. Have you all understood the question very clearly? You don't give me the amount of exemption. First tell me, have you understood the question or not? Yes, very good. So what will be the amount received according to you? 500 is received per month, na? Multiply by directly 12 months. Don't multiply it by number of children because they are not using the word per child. So amount received will be 6,000 rupees. Now can you tell me what will be the amount exempted from tax? Out of 6,000, how much will be exempt from tax? So I have got one answer, 3,600 will be exempt. Another answer is 2,400 will be exempt. I have got two answers. Oh, third answer. Nivitha is telling me, sir, 2,000 will be exempt. See what you have to do. You have to find out what is amount received per month per child. Compare it with amount specified per month per child. Then you select whichever is lower. Whatever is lower, take into account that amount and calculate the exemption. If you follow this procedure, then only you will get the right answer. So let me tell you, 3,600 is wrong answer, 2,400 is wrong answer, 1,200 is wrong answer. 4,000? That is also, 4,000 is what? 4,000 is exemption amount or taxable amount? I have asked you question on exemption amount. 4,000 is not exemption. 4,000 is not exemption. Can you tell me what is amount received per month per child? This of 500 is received for how many children? 6 children, na? 500 is not received for one child. It is received for 6 children. So what is received per child? How can you get that? 500 divided by 6. So amount received per child will be 83.33. It will be 83.33 per month. Amount received per month per child will be 83.33. Yes or no? Are you understanding this? So amount received per month per child is 83.33. Amount specified per month per child is 100. What is lower? Amount received is lower. How much is that? 83.33. Now you take into account 83.33 for the purpose of calculation of exemption. So 83.3333 per month, multiply by 12 months, multiply by 6 children. What will be the amount of exemption? Deva, it should not be 1,000. It should be 2,000. 83.33 per month, multiply by 12 months, multiply by 2 children will give you an amount of 2,000. Yes or no? Deva? Yes. So here the exemption will be 2,000 rupees. So what will be the taxable amount? 4,000 rupees. Have you understood the clear distinction between the example 3 and example 4? Examiner is going to ask you the situation given in example 4 and most of the students will be giving answer for situation covered in example 3. This is not taxation, this is English. So if per month per child what is appearing, then you should multiply by number of children. If per month per child is not appearing, then you should not multiply by number of children. If per child what is not appearing, then the amount is received for all the children combined. Why exemption only for 2 children? Padmesh is asking me why exemption for 2 children. Because government wants you to have only 2 children. You should do some family planning here. India is already at 135 crores. So government says that do some family planning. Anyway, we are having a scarcity of resources. Have you understood? Every one of you have understood the calculation? Rizwan is asking me, sir, is there any provision, separate provision for twins? So answer is no separate provision for twins in this case. There is no separate provision for twins. So in first attempt only you had twins. Then those twins will be considered as 2 children, or will it be considered as only 1 child? So answer is it will be considered as 2 children. It will be considered as 2 children. There is no separate provision for twins here. So if you had 2 twins, then those will be considered 2 children only. Those will not be considered as 1 child. Is that clear? Shall I proceed? Yes, okay. Second point is hostel expenditure allowance. Second point is what? It is hostel expenditure allowance. Say for example, Manoj is working with some multinational company and his job location is Chennai. One of the manager from Mumbai has left the organization and his position is not getting filled up because company is unable to find out the appropriate person. And Manoj is an appropriate person, but Manoj is located in Chennai. So company is offering Manoj a position in Mumbai. Company says that if you get yourself transferred from Chennai to Mumbai, then we will increase your salary by 50%. See, normally salary would increase by 5 to 7%. So Manoj thought that let me take the advantage of this. Let me get shifted to Mumbai. So Manoj got shifted to Mumbai along with his family. And for all his children now, Manoj has got the admission in some school in Mumbai. Now Manoj's children, they are going to school. Manoj's children, they are knowing Tamil and they are learning English. They know Tamil very well, but they are learning English. They don't know any other language. And when they started going to school in Maharashtra, in Mumbai, teachers there are taking lectures either in Hindi or maybe local language Marathi or sometime in English. So most of the things they are not in a position to understand. First exam, all of them failed. And in the school also, Manoj's children had a fight with their colleagues because they speak in Tamil with each other. And meaning of that word is something else in Hindi or Marathi. So because of misunderstanding, they had a very good fight with their friends in the school itself. So then Manoj came to know this is a problem of language. They don't understand Hindi and Marathi. English they are also learning. And people in Mumbai don't understand Tamil. So Manoj said to his boss that I don't want to stay in the city of Mumbai, I want to come back. Because my children are facing this difficulty. What is the purpose of earning more money? So Manoj's boss in Chennai has given an idea to Manoj. He said that do one thing. You stay in Mumbai only and in Chennai you get the admission for all your children in a hostel. And we will pay you some extra money for that also. So Manoj got all his 6 children admitted in a hostel in Chennai. So it is a hostel cum school. Within the hostel itself, there is a school. So company is paying Manoj some fixed amount of money called as hostel expenditure allowance. This is also given for which purpose? Personal purpose. What is amount specified? 300 per month per child, maximum 2 children. 300 per month per child, maximum 2 children. So, the calculation mechanism with respect to exemption would remain the same. Children education allowance, hostel expenditure allowance, calculation mechanism will remain the same. The only thing is, in case of children education allowance, amount specified is 100 rupees per month per child, maximum 2 children. Here it is 300 per month per child, maximum 2 children. Is that very clear? Manoj is asking me, sir, born twins are considered as one child, right? They both are considered as one child. So answer is, for the purpose of allowance, they are not considered as one child, they are considered as 2 children only. Born twins, they are not considered as one child, they are considered as 2 children only for the purpose of allowance. But yes, when we move on to the concept of leave travel concession, when we move on to the concept of leave travel concession, when we learn the exemption under section 10 clause 5, there this point will be relevant. There born children is considered as one child, not here. Have you understood, Manoj? For the purpose of allowances, born twins would be considered as 2 children. For the purpose of leave travel concession in section 10 clause 5, born twins would be considered as one child. That too in certain specific situation. If the twins is born in a second attempt, then only they will be considered as one child. If the twins are born in the first attempt, they would be considered as 2 children only. They are also. So we'll discuss that when we move on to section 10 clause 5, not right now. Let us not get into that because that point is not applicable here. Here, born twins would be considered as 2 children. Born triplets would be considered as 3 children. Born quadruplets will be considered as 4 children. Manoj, is that clear? Yes, let us proceed. Next is transportation allowance. Transport allowance. See, transport allowance is what? See, in category A, point B, you have learned traveling allowance. In category A, point F, you learned conveyance allowance. Traveling allowance is long distance traveling for official purpose. Conveyance allowance is traveling within the city and that too for official purpose. Then what is transport allowance? Transport allowance is for traveling from residence to office and office to residence. See, when you travel from residence to office, office to residence, that is considered as personal purpose. And if employer gives you some fixed amount of money for compensating the cost of travel from residence to office and office to residence, that is called as transport allowance. It is called as what? Transport allowance. Different names are used. Nomenclature is not important. Objective is important. Purpose for which allowance is given is important. Examiner in the examination may use the word traveling allowance. And then in the bracket he may say, this is for traveling from residence to office, office to residence. Then don't take it to category A. Take it to category B. Because nomenclature is not important. What is important is purpose of giving the allowance. For what purpose it is given. If the examiner says traveling allowance and it doesn't explain what it is, then take it to category A. But if examiner says traveling allowance and in the bracket he writes it is for traveling from residence to office, office to residence, then don't take it to category A. Take it to category B. It is nothing but transport allowance. Have you understood this? So instead of seeing what the name is used, instead of that we should look at the purpose for which the allowance is given. This transport allowance, amount specified is 300 per month. Don't use the word per child. You don't have to take your children to the office. Only you have to go to the office. So 3,200 per month, and this exemption is available only in case of handicap employee. So exemption will be available only if the employee is disabled. Otherwise, exemption won't be available. So in normal cases, exemption is not allowed for transport allowance. Is that very, very clear? Yes or no? So with this, category B also story is over. Category B also story is over. Now let's move on to category C. Category C. Category C, first point. In category C now, exemption is calculated as certain percentage of amount received. Exemption is calculated as certain percentage of amount received. See, in category C, government believes that definitely you are going to save some amount. You are not going to spend the entire amount. That government is certain about that. So government says, generally you will save some amount. So we are not going to give you exemption for the entire amount. Some portion of the amount received will only be exempted. So all that allowances are taken into category C. In that, the first allowance is allowance received by employees working in transport organization. This allowance is received by which employees? Those employees who are working in transportation sector. Means those who are working as a motorman in long distance journey, long distance traveling train. If you are working as a motorman in a long distance train, then if you leave your home, then you will be coming back after 2-3 days. Or if you are working on a ship and if ship is going outside India, then you are going to come back after 2-3 months. If you are working on an aircraft as a crew member, then also you are far away from your residence and you are far away from your office. Aircraft itself is their office. So all these people who are working in this transportation sector, they don't have a fixed place of office. Definitely their employer is having office. But the nature of their job is such that they are not located in the office. They will always be far away from their residence and far away from their office. So they tend to spend more money. Say for example, Manoj is working as a motorman in long distance journey, long distance train. So that Indian Railways train is going from Chennai to UP. Chennai to UP, it is going to take around say 40 hours time, one way traveling, 40 hours. Return journey 40 hours, so it is 80 hours plus when the train reaches UP, it will have a halt of say 8 hours or 10 hours. So 40 plus 40, 80 plus 10, 90. So if Manoj goes to UP as a motorman from Chennai in a long distance train, then he is going to come back only after 5-6 days. During that 5-6 days, he'll have to spend a lot of money. He cannot carry food for 5-6 days. So he'll have to have his breakfast outside. He'll have to have his lunch, dinner, etc. outside. Plus he may spend some money for toothpaste, etc., etc., etc. Lot of small expenditure. So for compensating all these small expenditure, employer may give you some allowances, and that is called as allowance for meeting personal expenses during the course of official journey. Manoj is on an official journey, but during that official journey, he is incurring some expenses for personal purpose, like breakfast, tea, coffee, snacks, lunch, dinner, etc. These are all personal expenses, but they are incurred during office hours, during the official journey. For compensating that, employer may give some allowances to those employees who are working in transportation sector. Ordinary people don't have transport allowance. No, they can get a transport allowance, but they will not get exemption. Mr. Redmi, ordinary people may get a transport allowance. They may get transport allowance, but government says we are not going to give any exemption for them. Recently, just before 2-3 years, government has removed the exemption. Earlier, here also there was exemption of 1,600 rupees. Amount specified was 1,600 for ordinary people, that government has removed. Why they have removed now, I will explain you later on. But transport allowance exemption is now available only to those people who are disabled. So in category C, we are in category C. First allowance is allowance received by employee working in transport sector for meeting personal expenses during the course of official journey. Exemption would be lower of following two amounts. What is first amount? Amount received into 70%. Why 70%? Why not 80? Why not 60? There is no logic behind that. Because government feels that you will spend maximum 70%, at least 30% amount you will be in a position to save. That is what they believe. And their understanding, their belief may not match with your belief. That is okay. So you have to accept whatever it is. I have told you at the beginning of the chapter only, saying that you have to mug up a lot of things here. So exemption is lower of following two amounts. Number one is amount received into 70%. And number two is 10,000 per month. Out of these two, whatever is lower will be exempted. And the moment you get the exemption amount, deduct that amount from amount received, balance will be taxable. Balance will be taxable. I have taken one example here. Mr. X, example 5. Mr. X is working with transport organization. He received 15,000 per month for meeting personal expenses during the course of official journey. So this allowance on that saving, 30% tax will not be levied. Tax will be levied at slab rate. Now, individual's income is taxable at slab rate. Yes, if his income is more than 10 lakh, then 30% tax. Correct? Okay. Example 5. X is working with a transport organization. He has received 15,000 per month for meeting personal expenses during the course of official journey. So this is which allowance? Transport allowance. Falls into which category? Category C. First point. Allowance received by employee working in transport sector. So what is the amount received? 15,000 per month multiplied by 12 months. 15,000 per month multiplied by 12 months is 1,80,000. Out of this 180, how much will be exempt? Exemption will be lower of following two amounts. Number one is what? Amount received into 70%. What is the amount received? 1,80,000. Multiply that by 70%, you get 1,26,000. That you compare with 10,000 per month multiplied by 12 months, that is 1,20,000. So out of 126 and 120, what is lower? 120 is lower. So 120 will be exempted. So what will become taxable? 60,000 is taxable. Have you understood this example? Yes or no? Yes. Then if you have understood, let me ask you one more question. Let me give you some different number. See, this is the rule. This is the provision. This is the exemption calculation. Amount received into 70% is 10,000 per month, whichever is lower. Now you tell me, if employee is receiving 10,000 per month, if employee is receiving 10,000 per month, then how much will be the amount of exemption and how much will be taxable amount? Employee is receiving how much? 10,000 per month. Yes. Exemption 0. Deva says exemption 0. Deva, exemption cannot be 0. What is the amount received? 10,000 to 12. 1 lakh 20. 10,000 to 12, 1 lakh 20 is the amount received. Correct. Exemption is lower of following two amounts. 70% of amount received. So 1 lakh 20 into 70%, 84. Or 10,000 per month into 12 months, 1 lakh 20. What is lower? 84. So that will be exempted. What is taxable? 36. Is that very, very clear? Okay. So category C, we have completed the first point. Category C, we have completed the first point. Allowance received by employee working in transport sector. The next point in category C is the most important one, and that is house rent allowance. Next point in category C is most important one, that is house rent allowance. Before we try to understand what is house rent allowance, we need to understand all the allowances which are falling into fully taxable allowance category. So I am keeping aside house rent allowance for the time being. I am moving on to fully taxable allowance category. Now listen to me very carefully. See, is it necessary to remember all this allowance? Yes. Otherwise, you will not be in a position to answer the question. So what you have to do now? Fully exempt category you have to remember. Partly taxable, partly exempt, I will make you remember. Fully exempt category you have to remember on your own. Partly taxable, partly exempt, I will make you remember. And anything which doesn't fall into fully exempt and also doesn't fall into partly taxable, partly exempt will automatically fall into fully taxable. Will automatically fall into fully taxable. Did you understand what I say? So we are moving on to fully taxable category. This is the illustration. It is not exhaustive. This is the not the list of it is not an exhaustive list. It is an illustrative list. This is made from the past examination papers. The first allowance is dearness allowance. Dearness allowance. Dearness allowance is also called as high cost of living allowance. Because of inflation, cost of living will increase. To compensate that increased cost of living, employer may give you something called as dearness allowance. Employer may give you something called as dearness allowance. This dearness allowance falls into fully taxable category. It falls into which category? Fully taxable category. Very important point to be noted in connection with dearness allowance is dearness allowance can be either recognized dearness allowance or it can be ordinary dearness allowance. What do you mean by recognized dearness allowance? Recognized dearness allowance means that portion of dearness allowance which is forming part of basic salary for the purpose of computation of retirement benefits. provident fund, gratuity, etc. All these are retirement benefits. So for the purpose of computation of those retirement benefits, that portion of dearness allowance which is considered as part of basic salary, that portion is called as dearness allowance recognized. This dearness allowance recognized is also called as DA in terms. DA in terms. And we have second point, dearness allowance ordinary. What do you mean by that? Dearness allowance ordinary means that portion of dearness allowance which is not forming part of your basic salary. For what? For the purpose of computation of retirement benefits and for the purpose of computation of exemption, etc. This is also called as DA not in terms. This is also called as what? DA not in terms. I am very much sure you have not understood anything till now. So I am taking an example. Example number 7. To understand dearness allowance recognized and ordinary. To understand the dearness allowance recognized and ordinary. For example, question says basic salary is 15,000 per month. Question says basic salary is 15,000 per month. Whether basic salary is taxable? Yes, definitely it is taxable. Basic salary is fully taxable. In the next line, question says dearness allowance 5,000 per month. Tell me, dearness allowance falls into which category? Dearness allowance falls into which category? It falls into fully taxable category. So entire amount of 5,000 is taxable to you. 5,000 per month multiplied by 12 months, that is 60,000, entire amount is taxable. But in the question, just next to dearness allowance, they have written the word 60% recognized. What is the meaning of this now? This dearness allowance of 5,000 now, you have to bifurcate in two parts, 60% and 40%. 60% means how much? 3,000 per month. 40% means 2,000 per month. This 3,000 per month out of 5,000 now will be taken into account for the purpose of computing retirement benefits. And this 2,000, which is 40% of 5,000, will not be taken into account for the purpose of computing retirement benefits. For example, we need to calculate certain exemption. Or we need to compute your retirement benefits. Generally, at the beginning only, while I explained you something called as basic salary, what I told you? While explaining meaning of basic salary, what I told you? Basic salary is minimum amount of salary which every employer will pay to employee. Based on the basic salary, your retirement benefits will be computed. Your retirement benefits would depend upon two factors. Factor number 1, what is the amount of basic salary? And factor number 2, what is the length of your service? So generally, retirement benefits are computed on the amount of basic salary. But if your dearness allowance is recognized now, then that recognized dearness allowance will also be added to basic salary. Thereafter, based on that new amount means combined basic salary plus dearness allowance recognized component. Based on that aggregate amount, exemption or retirement benefit will be calculated. In this example, how much is your recognized dearness allowance? 3,000. That 3,000 will be added to your basic salary. So your basic salary is 15,000. Your dearness allowance recognized component is 3,000. So that total will turn out to 18,000. Your exemption and your retirement benefit will be calculated based on 18,000 rupees. Based on 18,000 rupees. See, if we calculate exemption based on basic salary 15,000. Your exemption, your retirement benefits will be less. If we calculate based on basic salary plus recognized DNS allowance, that is 18,000, your retirement benefits and your exemption will be more. So what do you mean by DNS allowance recognized component? DNS allowance recognized component is considered as good as basic salary for the purpose of computation of retirement benefits. Are you understanding? Have you understood something? What about others? Last sentence I said that recognized dearness allowance means that a portion of dearness allowance which will be considered as good as basic salary for the purpose of computation of retirement benefits. Listen to me very carefully. I am repeating, listen to me very carefully. This is most important point. If you don't understand this, all the calculations in future, further part of the chapter will go wrong. Before I explain you or before I repeat, first of all you tell me, dearness allowance falls into which category? Dearness allowance falls into which category? Fully taxable category. Don't tell me 1, 2, 3. It falls into fully taxable category. What is the meaning? What is the meaning thereby? It is fully taxable. So in this example, my basic salary is 15,000. That is fully taxable. My DNS allowance is 5,000 per month. That is also fully taxable. Nothing is exempted. Now question says me, my DNS allowance is 5,000 per month. It further says 60% recognized. In the bracket they have written 60% recognized. What is the meaning of that 60% recognized? I have to bifurcate. First of all, I have to bifurcate my DNS allowance in two parts, recognized and ordinary. If 60% is recognized, balance 40% is ordinary. Now you get me what are these amounts. DNS allowance is 5,000. 60% is recognized. So 60% of 5,000 is 3,000. That 3,000 is recognized DNS allowance. So the balance 40% of 5,000, that is 2,000, is ordinary DNS allowance. Now recognized portion is 3,000, ordinary portion is 2,000. Now what is the point here? This recognized portion of your DNS allowance, this 3,000 is considered as good as basic salary. You take this 3,000 per month as if it is a basic salary. As if it is a basic salary. See, for example, Manoj cleared his chartered accountancy on the day of result. On the day of result, Manoj cleared both the groups of CA intermediate. And I am very happy. I told Manoj, tell me what you, I am very happy today because you cleared the examination. Tell me what you want. So Manoj says, will you give me whatever I want? I told yes. So Manoj says, I don't want to demand something more from you. You just get me one glass of beer, that's all. He is an alcoholic person. He says, sir, just get me one glass of beer. I am non-alcoholic. So I don't have alcohol and I don't serve alcohol also. So what I did now, I took this glass, I poured some water in this and I offered this to Manoj saying that drink this as if it is alcohol. Is it actually alcohol? No. But you think that it is alcohol. Drink as if it is beer only. So we have feeling of beer just by having water. So actually it is not alcohol. You think as if it is alcohol. Here also this 3,000 per month, 3,000 per month is not your basic salary. but you give treatment as if this 3,000 is your basic salary. So add this 3,000 to your basic salary, thereby for the purpose of computation of retirement benefits, your basic salary would be considered to be 18,000. And if you calculate the retirement benefits based on 18,000, definitely your retirement benefit amount will be more. So when you retire, you are going to get higher amount of retirement benefits. Have you understood this? Yes or no? So, dearness allowance recognized portion is that portion, dearness allowance recognized is that portion of your retirement, that portion of your dearness allowance which is considered as good as basic salary for the purpose of computation of retirement benefits. For the purpose of computation of retirement benefits, that would be considered as good as basic salary. As if that is a basic salary only, accordingly retirement benefits will be calculated. So once again, if I ask you, how much dearness allowance is taxable in this case? If I ask you question, what is the amount of dearness allowance taxable in this case? It is fully taxable, 5,000. Akshaya madam, from where you are getting this 18,000? 15 plus 3. I repeat once again for you. Dearness allowance recognized and dearness allowance ordinary. It is not that dearness allowance recognized is taxable and dearness allowance ordinary is exempt. Or other way around, dearness allowance ordinary is taxable and dearness allowance recognized is exempt. That is not the meaning. Dearness allowance falls into fully taxable category. So entire amount of dearness allowance of 5,000 is taxable. Recognized means that will be considered as good as basic salary for the purpose of computation of retirement benefits. Is that very, very clear? So if I ask you a question, what is the amount of dearness allowance taxable? Answer should be what? 5,000 rupees, 5,000 rupees. Yes. So we have completed example number 7. With this, you might have understood what is the difference between dearness allowance recognized and dearness allowance ordinary. Now tell me, as an employee, what will be beneficial for you? If your dearness allowance is recognized, that will be beneficial, or if dearness allowance is ordinary, that will be beneficial for you. If dearness allowance is recognized, that would be beneficial for you. See, whatever is beneficial for you is not beneficial for your employer. Now the question is who will decide whether your dearness allowance is recognized or whether your dearness allowance is ordinary. That your employer will decide. So generally, what he will decide? He will decide that your dearness allowance is ordinary, or he will not mention anything in your appointment letter. He will just say dearness allowance. So in that case, if appointment letter is silent, if question is silent in the examination, it just says dearness allowance, then that dearness allowance should be assumed, should be presumed to be ordinary dearness allowance. If some portion of dearness allowance is recognized, how much is recognized will be given to you in the question, and in the appointment letter also it is clearly mentioned. If it is not mentioned, that should be considered as ordinary dearness allowance. Vidyashri, that 60%, 40% proportion will be given in the appointment letter in practical life, and in examination will be given in the question. If it is not given, then the entire dearness allowance is considered as ordinary dearness allowance. Have you understood this? Okay. Now just below that flow chart. Yes, yes. Irrespective of whether the DNS allowance is recognized or it is ordinary, it is fully taxable. But while computing retirement benefits, while computing certain exemptions also, you have to take only recognized portion. Your understanding is perfectly correct. Let us now read this. DNS allowance recognized, I have already read. DNS allowance ordinary also I have already read. Important note. When the question is silent as to whether the DNS allowance forms part of salary or not for computing retirement benefits, it should be presumed that DNS allowance is not forming part of salary for computing retirement benefits. Otherwise, if question is silent, in other words, if the question is silent, then we should take an assumption that your DNS allowance is ordinary DNS allowance. Have you understood this? Yes or no? This is the most important point. Everyone should understand 100%. If you still have doubt, tell me, I'll explain once again. But if you have confusion here, it will create a lot of problems. So fully taxable allowance, na? Summarize once. Ronak says summarize once. I'll summarize in 4-5 sentences. Dearness allowance is given for compensating the increased cost of living. It is also called as high cost of living allowance. Number 2, dearness allowance falls into fully taxable category. Number 3, dearness allowance can be either recognized or ordinary. Recognized dearness allowance is considered as good as basic salary for the purpose of computing your retirement benefits. And ordinary dearness allowance is not taken into account while computing your retirement benefits. If your dearness allowance is recognized, you are at a beneficial situation, you are at a beneficial position because that amount of dearness allowance will be added to your basic salary. So amount of salary for the purpose of computation of retirement benefits will increase. If question is silent, then dearness allowance should be assumed to be ordinary dearness allowance. Ronak, is that clear? Okay. Let's move on to the remaining allowances. Now these are self-explanatory. Most of them are self-explanatory, so it would not require that much amount of explanation. Number B is entertainment allowance. Entertainment allowance. See, if you work throughout the year in the office, now you are fed up, you are frustrated. Working continuously every day, 10 to 8, 10 to 6, 10 to 9, 10 to 10. So you may be bored of your life. So sometimes your office will take you to some picnic place. So office will arrange a picnic for all the employees. Now since it is free of cost, now everyone will go. But when they come back, they will have gossip as to I earlier only told you that this is not the correct place to go. They are not ready to spend more amount. We should have gone outside India. So everyone is having their own opinion. So in such case, employer may say that from next year onwards we will not go to picnic. Instead of that, I am going to give you some 500 rupees per month extra. So throughout the year, you will get extra 6,000 rupees and you spend that 6,000 for your own entertainment. If you feel that watching movies is entertainment for you, go and watch movies. If you feel that traveling at some place is, if you travel to a particular place, it will entertain you, you travel to that place. You decide how you want to entertain yourself. So instead of taking you to picnic, your employer is giving you fixed amount of money. so that you entertain yourself and you are always fresh when you are working in office. So for your entertainment, employer gives you a fixed amount of money, that is called as entertainment allowance. Next is city compensatory allowance. See, I am quickly explaining all these allowances in one line. If no one is going to ask you the meaning of this. If at all, if you don't understand something, please drop me a message. City compensatory allowance. See, if you stay in a city, naturally the cost of living will be more. Not because of inflation. Inflation is everywhere. Inflation is everywhere, but in cities there is a inflation also, and because it is a city, the cost of living will be more. Because in city we don't have agriculture, so you have to transport all food grains, fruits, vegetables from some other place. So it will have a transportation cost. So in city you will see that vegetables are costlier, fruits are costlier, everything is costlier in city. Because you have to transport those things from other parts of the country. So, for example, I am working with State Bank of India, Mumbai. Manoj is working with State Bank of India in some rural part of the country. I am working at a same designation. Manoj is also working at a same designation. Whose salary will be more? My salary will be more, or Manoj's salary will be more? We both are working in State Bank of India, same designation. My salary and Manoj's salary will remain the same. My benefits and his benefits would also remain the same because we are working at the same designation. But since my job location is in city, I am in city, things are costlier in city. For compensating that, employer will give me something called as city compensatory allowance. My basic salary and Manoj's basic salary will remain the same. But I'll get some extra allowance called as city compensatory allowance, which Manoj may not receive, or he may receive less amount because he is in some tier 2 city, I am in a tier 1 city. Tier 1 city, metro city will have higher cost of living. Tier 2 city will have comparatively lower cost of living. Rural areas, still you will have lower cost of living. So if you are in a city, you have to face more higher cost of living. For compensating that, your employer may give you something called a city compensatory allowance. Next, point D is medical allowance. This is self-explanatory. Your employer is giving you 1,000 rupees per month, saying that if you fall sick or any if a family member falls sick, this money can be spent for that. Point number E is your favorite allowance, stomach allowance, lunch, tiffin, refreshment allowance. It is self-explanatory. Point F, overtime allowance. In some companies, if you work after the official hours, say after 6 p.m. if you work, you are going to get some extra amount of money for every 1 hour of effort. Every 1 hour put it extra in office, you will get some extra amount of money, that is called as overtime allowance. Next is servant allowance. Next is servant allowance. For example, Deva madam cleared her chartered accountancy. She cleared CA final. She has got a job in multinational company. Officially, the job timing is 10 to 6, but generally they work from 10 to 8 or 10 to 9. So one fine day she has resigned. One day she resigned saying that I cannot work for 10 to 8, 10 to 9 because I have to go home, make food for my family. Only when I cook the food, my family will have a food on their plate. So, I will work at such a place wherein the official timing is 10 to 6 and the actual timing is also 10 to 6. So that I can leave my office at 6 o'clock, I can reach my home at 7 o'clock. While going home, I'll purchase vegetables, etc. I'll make food for my family, then my family can have food. So I can't work till 8 p.m., 9 p.m., etc. So she has resigned, and she was one of the top performing employees in the organization. So organization came out with some midway, some alternative path, and organization told that instead of you resigning, what we'll do now, we'll find out a path for you. We'll find out a way out. We'll give you some, say 10,000 rupees extra. We'll give you 10,000 rupees extra money every month as a servant allowance. Now what do you do now? With the help of this money, you appoint a cook, you appoint a cleaner in your house. So when you reach home now, your food will be ready. You appoint a cook, he will make food for your entire family. So when you reach home, your food will be ready. So she has agreed to take back her resignation. Company is now paying her 10,000 rupees per month as servant allowance. Definitely this is for personal purpose. So this is servant allowance. Next is warden allowance. Next is warden allowance. See, sometime in the college itself there is a hostel premises. In hostel also there is a principal. The way in college you are having principal, similarly in hostel also you are having a principal. The person who is managing the hostel, that person will be called as a warden. So say for example, in the same premises, in the same compound, you are having the college building also, hostel building also. And the institution is not getting some principal for the hostel. So what institution has done now? They have appointed one of the college faculty only they have appointed one of the college faculty as an principal for the hostel, and they are saying that we will pay you some extra amount of money called as warden allowance. So warden allowance is given for what? For managing the hostel. So you have appointed some teacher from the same institute, and you have told him to spend 2 hours a day in that hostel, and you are going to pay him 10,000 rupees per month extra amount. That will be called as warden allowance. Next is non-practicing allowance. See, all those doctors who are working in government hospitals, they cannot start their own clinic. That is not allowed. Because there is a conflict of interest. If they start their own clinic, then they will take away patient from the government hospital, and they'll ask the patient to come to their private clinic, and they will charge more amount of fees to them. Patients who cannot afford will also have to spend money out of their own pocket. So government says, doctors working in government hospitals, we will not allow them to practice. And since we do not allow them to practice now, they are losing an opportunity to earn some extra revenue now. If we do not allow them to practice, they are losing an opportunity to earn some extra revenue. To compensate that opportunity cost, we will pay them something called as non-practicing allowance. We will pay them something called as non-practicing allowance. This non-practicing allowance is falling into fully taxable category. It will be totally taxable. It will be added to your income. Now Redmi says, sir, they are not allowed to practice, but they are practicing. That I know, but that is unofficial. If the employer, state government, central government, whoever it is, if the employer is paying non-practicing allowance, then you are not allowed to practice. And if at all some doctor is practicing, then it is unofficial. See, even college teachers, they cannot start their own coaching institute. College teachers are not allowed to start their own coaching institute. They start, that is unofficial. So if some doctor is practicing, doctor is working as a, if person is working as a doctor in a government hospital, he is not allowed to practice. If he is practicing, then it is unofficial he is doing. Next is telephone allowance. What do I have to explain about this? This is self-explanatory. This is given by the employer to meet the cost of communication. Any other allowance which is not exempt. So if you come across any other allowance which does not fall into fully exempt category, which does not fall into partly taxable, partly exempt category, and which does not come within the range of point number A to J, then it will fall into fully taxable category. So any allowance which is not fully exempted, which is not partly exempted, partly taxable, will automatically fall into fully taxable category. Have you understood this much? Yes or no? Okay. Now listen to me very carefully. Listen to me very carefully. I am giving you some disclaimer. There are certain allowances. There are certain allowances which are given in the module, which generally I don't teach because they are not asked in the examination. There are a lot of allowances which are given in the module, but generally I don't teach in the class because they are not asked in the examination. Since last lot of years they have not asked in the examination. I will give you certain examples. One of them is border area allowance. Border area allowance means it will be given to those people who are working as part of border security force. So they are working at their job location is India-Pakistan border or India-Nepal border, etc. So people working in military, paramilitary forces would get something called as border area allowance. Or you may have remote area allowance. Remote area allowance. If your job location is situated in a remote area, then you will have to face hardship, na? For that you are going to get remote area allowance. There is something called as tribal area allowance. Tribal area allowance. If your job location is in some tribal area, you may get something called as tribal area allowance. There is something called as island duty allowance. Island duty allowance. Say for example, Andaman and Nicobar Island belongs to India, na? So if you are working in a military or paramilitary force and you are being assigned the job location of Andaman and Nicobar, in that case you may get island duty allowance. So I don't want to get into the details of it. There are a lot of such allowances which are not been asked in the examination since very long. So what I will do now, I will ask you to refer to those allowances from the module. Take this as homework. Refer all such allowances from module once. You will understand everything, but they are difficult to remember. So what you can do is, you can remember those allowances which are given here. Fully exempt, partly taxable, partly exempt, and those allowances which do not fall into either fully exempt category or partly exempt, partly taxable category will automatically fall into fully taxable category. Is that very, very clear? Yes? Okay. Now, Rizwan is asking me what is the difference between lunch, tiffin, refreshment allowance and daily allowance. See Rizwan, daily allowance is an allowance given to meet some extra cost on daily basis, money which you spend on daily basis when you are far away from your residence, when you are far away from your official place of duty. So those people who are working as a sales manager or marketing manager, they will be always on a field. So then they tend to spend more money. Whereas lunch, tiffin, refreshment allowance can be given to every employee. It can be given to every employee. If employer feels so that I should give some lunch allowance to my employees, then he may give it to all employees. It is not necessary that employer will give lunch allowance only to those people who are working outside the office. He may give lunch allowance to everyone. So lunch allowance is exclusively for lunch only. But daily allowance is for lunch, snacks, or some other small expenses. Whenever you are far away from your office and whenever you are far away from your residence, you tend to spend a lot of money, na? For example, if you are far away from your office as well as residence, then definitely you are not going to carry food with you. So lunch, breakfast, snacks, or may small amount of traveling, etc. Everything will be included in that daily allowance. Is that clear, Rizwan? Yes. Now, before we have a break, I just want you to go through one important note here. Mark this note as important. I have already written important note, but you can mark this as very important. What it says, exemption will be allowed to transport employees only when they are not in receipt of daily allowance. If they are in receipt of daily allowance, they can claim exemption under Part A, Clause B. Meaning thereby, Category A, point number C, daily allowance. Category A, point C. One second. Category A, point C, daily allowance. And category C, point A, allowance received by employees working in transport organization. The purpose of both these allowances is same. You are far away from your office, you are far away from your residence. So the purpose of both these allowances is same. But category C allowance is received by exclusively those people who are working in transportation sector only. And daily allowance is generally received by people working in marketing and sales team. But the basic purpose of giving the allowance is same. These people are far away from their residence, they are far away from their official place of duty. Therefore, we are giving them allowance. Is that very clear? Therefore, government says, if you are getting both the allowance, you are getting the daily allowance and you are also getting this category C point A allowance, then we are not going to give you exemption twice. You claim the exemption for category A, daily allowance, and category C point number A will become fully taxable to you. Category A point number C will become fully taxable. So you can't claim exemption for the same thing in category A as well as category C. Is that very clear to you? Yes or no? That 70% is fixed, yes. 70% is fixed. So, with this, we have covered most of the allowances. Only one is left. Only one allowance is left, and that is house rent allowance. Only one allowance is left, and that is house rent allowance. Correct? So, we'll have a break. After the break, we'll discuss the house rent allowance. So, now we move on to the most important, the last allowance in this, but the most important one, that is house rent allowance. What is that? House rent allowance. See, house rent allowance is an allowance which is given by employer to the employee for meeting high cost of housing. See, housing cost, if housing takes away a huge amount of your income, then you will not have money to spend on other things. So wherever the cost of housing is more, employer may give you some amount of money to meet that cost of housing, and that amount is called as house rent allowance. That house rent allowance which you receive from your employer, for that you can claim exemption. Exemption is granted in section 10 clause 13A. And very important point to be noted is, exemption will be allowed only if you are staying in a rented house. If you are residing in your own house, means you are not paying any rent. In that case, you are not going to get any exemption. Exemption will be available with respect to house rent allowance only if you are staying in a rented house. If you are staying in your own house, or maybe you are staying in some house for which you are not paying any rent, in that case you are not going to get any exemption. Say for example, you are residing in your father's house and you are not paying any rent to your father. So in that case, you are not spending money on rent. In that case, no exemption will be given for house rent allowance. Entire house rent allowance will be taxable. Have you understood this much? Yes or no? So, number one, house rent allowance is given to meet the cost of housing. Number two, you are eligible to claim exemption only if you are staying in a rented premises, you are paying the rent. And number three, exemption will be lower of following three amounts. Exemption will be lower of following three amounts. Number one, rent paid minus 10% of your salary. What is number one? Rent paid minus 10% of your salary. So first of all, you take what is the amount of rent which you are paying. From that, you deduct the amount of 10% of your salary. In other words, government is trying to tell you that only if the cost of housing is more than 10% of your income, you are going to get the exemption. Exemption, you will be getting the exemption only when the cost of housing is more than 10% of your income. So that makes the equation rent paid minus 10% of salary. If the answer for point number one is negative, in other words, if your rent paid is less and 10% of salary is more, then in that case you will get a negative amount. In that case, amount number one will be considered to be 0, and in that case your exemption will be 0. Entire amount of house rent allowance will become taxable. So first point you have to write rent paid minus 10% of salary. Point 2, if you are residing in a metro city, you take 50% of salary in point number 2. If you are residing in non-metro city, you take 40% of salary in point number 2. Metro city means only 4 cities: Mumbai, Delhi, Kolkata and Chennai. Mumbai, Delhi, Kolkata, Chennai are considered as metro city. So if you are residing in metro city, you take 50% of salary. If you are residing in non-metro city other than metro, then you take 40% of your salary in point number 2. Then we have point number 3, actual amount received. Everywhere, whenever you will calculate exemption, one amount is fixed, that is actual amount received. Now, if you refer to these 3 points, out of these 3 points, first point, they are saying rent paid minus 10% of salary. In second point, they are saying 50% of salary, 40% of salary. Question is, what do you mean by salary? Which salary should we take here? That salary is defined. That salary includes number 1, basic salary, number 2, dearness allowance, recognized component. Only recognized component you have to take. If the question is silent, then dearness allowance is considered to be ordinary dearness allowance. In that case, you should not take it. You should take only when the dearness allowance is recognized. And then you take the turnover commission. Then you take the turnover commission. See, what do you mean by commission? Commission is nothing but some money paid to those people who are selling your goods on your behalf. This commission can be of two different nature. It can be fixed commission. Fixed commission means same amount of commission is given every month. And number 2, it can be commission based on turnover. Means whatever quantity of goods you have sold, whatever value of goods you have sold, Based on that value, certain percentage of commission will be given to you. So this commission is called as commission, which is calculated based on turnover. This commission is fixed commission. In that definition, you have to take this one, commission which is based on turnover. This would be generally received by those people who are working in a sales team. So every person working in a sales team will have some sales target, na? So if he achieves that target, he will get some extra commission as certain percentage of turnover. That is called as a turnover commission. So while you calculate salary here, what is the purpose or what is the objective of calculating salary here? The objective is to calculate the exemption. Our ultimate objective here is to calculate the exemption for house rent allowance. For that purpose, we are taking up the salary. In that salary, you should not take everything. Only three components are required to be taken. Which are those three components? Number one, you take basic salary. Number two, you take dearness allowance, only recognized component. And number three, you take turnover commission. Have you understood this? Yes or no? Yes. Okay. Now listen to me very carefully. See, example 8, factors based on which HRA exemption is computed. See, if you refer to this formula for calculation of exemption, exemption is lower of following three amounts. Exemption is lower of following three amounts. If I ask you, there are how many factors based on which your exemption is calculated? In other words, factor means there are how many constituents or there are how many components. In other words, in any of those factors changes, if any of those factor changes, then your exemption will also change. So, question is there are how many factors? So, you can count here. Number one factor is rent paid. Number one factor is what? Number one factor is rent paid. Rent paid is the first factor. Let me remove this. What we are now finding out? We are trying to find out there are how many factors based on which your HRA exemption is calculated. So first factor is rent paid. If the amount of rent paid changes, then point number one will change. If point number one changes, your exemption may change. This is the first factor, point one. Second factor is salary, but salary itself is consisting of three factors. What is that? Basic salary, dearness allowance recognized component, and turnover commission. So basic salary is factor number 2. Dearness allowance is factor number 3. Dearness allowance recognized component is factor number 3. And turnover commission is factor number 4. Then factor number 5 is whether you are in a metro city or non-metro. Metro or non-metro, this is factor number 5. And factor number 6 is your actual amount received. Actual HRA received. This is your factor number 6. So I can say that your HRA exemption calculation depends upon 6 factors. If all these 6 factors are constant throughout the year, then you can do the exemption calculation by just making single column. Are you understanding what I am trying to explain you? Your HRA exemption depends upon 6 factors, meaning thereby if any of those factors changes, the exemption amount may change. Are you understanding? Yes or no? Yes. Tell me which are those 6 factors? Number 1 factor is rent paid. Number 2 factor is basic salary. Number 3 factor is dearness allowance recognized component. Number 4 factor is turnover commission. Number 5 factor is whether you are staying in metro city or non-metro city. And number 6 factor is actual amount received. Now I am saying you that if all these 6 factors are constant throughout the year, they are constant throughout the year, in that case you can compute exemption in single column. Means you can take only one column for amount, put all the numbers for 12 months, do the calculation, then decide amount number 1, 2, 3 what is lower, that would be the amount of exemption. But if these 6 factors are not constant, then you have to calculate exemption by making multiple columns. Meaning thereby monthly columns are required to be made. Monthly columns, if you make, you will be having how many columns? 12 columns you will be having. But instead of 12 columns, you can do some shortcut calculation by just making less number of columns. So here I have written, if 6 factors are constant, they are same, you do the exemption calculation in single column. If 6 factors are not the same, they are not constant, then multiple column calculation is required to be done. Multiple column means generally how many columns? Generally 12 columns. So April to March you make separate column for every month. You calculate rent paid minus 10% of salary, metro, non-metro 50%, 40%, actual HRA for all the columns separately. Then you select whatever is lower in all the columns. Then you add entire amount. But this is going to consume lot of time. So instead of doing such a lengthy exercise, I'll explain you some shortcut. Listen to me very carefully. Are you understanding what I'm trying to explain you? Yes or no? Your HRA exemption depends upon 6 factors. If all these factors are same, they are constant throughout the year, means there is no change in basic salary. Your basic salary is same throughout the year. Your dearness allowance is same throughout the year. Your actual HRA received is same throughout the year. Your rent paid is same throughout the year. Throughout the year you stayed in a metro city. Your turnover commission is same throughout the year. If all these factors are same, you can make a single column calculation for the purpose of computation of exemption. But if any of the factors are changing, then for some months, out of 3 amounts, first can be lower. For few months, out of 3 amounts, second can be lower. For few months, out of 3 amounts, third can be lower. So, for finding out the correct amount of exemption, you will have to make multiple column calculation. If you go on making columns, you can make 12 columns. But if you make a 12 column solution, it is going to consume a lot of time. Therefore, I am going to explain with the shortcut methodology. And with that shortcut methodology, you will get the same amount, same answer by making less number of columns. For example, listen to me very carefully. Say for example, I am reading the question. Before I start reading the question, if I come across house rent allowance, I will decide that I will be making one column for 12 months, that is April to March. This is my first decision. Decision 1. I will be making a single column calculation for the purpose of computation of exemption. That would be my first decision. Then I would start reading the question. While reading the question, I came across a statement saying that your basic salary is say 20,000 per month. Your basic salary is 20,000 per month up to 30th June. With effect from 1st July, it is increased to 25,000 per month. So can I say one factor, that is basic salary, has changed? It has changed from which date? 1st July. So in that case, what should I do now? I should change my decision. Now I have decided that this timeline of 12 months, I will cut into two parts. 30th June, I will cut this timeline. So my decision 2 is, I will make separate column for April to June, and I will be making a separate column for July to March. So April to June and July to March. April to June 3 months, I will make a separate column. July to March 9 months, I will make a separate column. Are you understanding this? Yes or no? Now I am reading the question further. It says that up to 30th September, employee resided in Mumbai, and with effect from 1st October, he is residing in Madurai. Mumbai is a metro city, Madurai is a non-metro city. So that metro non-metro factor is changing. When? From 30th September. So I am going to cut at 30th September. I will be cutting my timeline at 30th September. So this decision of making first column for 3 months, that is April to June, that is intact. But this July to March 9 months column, that I need to cut at 30th September. So I will have second column from July to September and third column from October to March. Are you understanding this? Yes? Are you understanding how I am cutting the timeline and making multiple columns? I need to decide how many columns I should make. So whenever any factor changes, I will cut the timeline. Say for example, I am reading the question further. It says that rent paid was, employee stayed in a rented premises. Rent paid was 15,000 per month up to 31st December. With effect from 1st January, rent is increased to 17,000. So one more factor, rent paid is changed. From which date? 31st December. So what should I do? I should cut the timeline at 31st December. So my decision to make first column for 3 months, April to June, that decision remains intact. July to September, this also remains intact, 3 months. This October to March, I will now divide it in two parts. October to December and January to March. Now say for example, I have completed the reading of the question. So what is my final decision? I will be making how many columns? 4 columns. First column for April to June, second column for July to September, third column for October to December, and fourth column for January to March. This is my final decision. So if I make the solution by putting 4 columns now, I'll get the same answer which you will find out by putting 12 columns. So you are going to take thrice of my time. I may spend 5 minutes, you are going to spend 15 minutes if you are going to make 12 different columns. So this is the shortcut methodology, but you have to correctly find out how much column is required to be made. If you don't find out correctly, then your answer will be wrong. Have you understood this? Yes or no? It is very simple. If any of these factors, if any of the factor out of this factor changes now, there you have to cut the timeline. That's all. Shall I proceed? So decision 1, decision 2, decision 3, decision 4. I have cutted the timelines based on the at what point of time the factor is changing. With this, our discussion with respect to house rent allowance comes to an end. Our discussion with respect to house rent allowance comes to an end. So this entire allowance part is over. Now, before I move on to practical question, I'll help you to remember this partly taxable, partly exempt allowance. I'll help you to remember this partly taxable, partly exempt allowance. See, fully exempt allowance you have to remember on your own. Partly taxable, partly exempt, I'll help you to remember. And whatever doesn't fall into fully exempt, doesn't fall into partly taxable, partly exempt, will be automatically covered by fully taxable. If factor changes in between month, then you have to bifurcate the timeline in between month. But those things, such a complicated situation will not be asked to you in the examination. Can a factor change during the month? Generally, no. Generally, your salary will change at the beginning of a particular month. It will not change at the middle of the month. Or if you are staying in rented premises, your rent is not going to change somewhere in the middle of the month. So practically this is not possible, but if at all it happens, you have to make the columns accordingly. Such kind of complicated situation will not be asked to in the examination. Now, partly taxable, partly exempt allowance. I'll help you to remember this. Fully exempt allowance, there are 3 points you should remember. 3 points. First one is allowance received by MP/MLA. Number 1, allowance received by, number 2, allowance received by judges of High Court, Supreme Court. Judges of High Court and Supreme Court. And number 3, allowance received by government employee rendering services outside India. These 3 you should remember. These are near and dear ones of Government of India. Partly exempt, partly taxable, or partly taxable, partly exempt allowance. You have 3 categories: category A, category B, and category C. In category A, you are having 6 points. Category B, you are having 3 points. Category C, you are having 2 points. So I'll help you to remember this. 6 plus 3, 9 plus 2, 11 points. I am giving you some dialogue, statement. See, if I ask you to select 3 players from the Indian cricket team, that way every player in the Indian cricket team is a champion. But if you want to select the best captain, till now, who is the best captain in the history of Indian cricket? Which player you would select? Definitely Dhoni, you should not have any doubt. Which is the best batsman in the Indian cricket history? Definitely Tendulkar. Don't think about Virat. Maybe Ishwar, Kedar Jadhav might be your favorite. but his track record is not comparable to Tendulkar's track record. Best off spinner from North India. A best off spinner from North India, not South India. Don't say Ashwin. Best off spinner from North India is Bhaji. So you should remember that all the players in the Indian cricket team are champions. But if we need to select the best captain, it is Dhoni, best batsman, it is Tendulkar, and best off spinner from North India, it is Bhaji. That's all you need to remember. And if I ask you which is the most popular uniform in the country, definitely you would say that it is a uniform of an Indian cricket team. If I ask you to wear the jersey of Indian cricket team and go out on roads, then you will feel that as if you are one of the team member. So Indian cricket team jersey is very popular, is the best jersey in this country. So you have to just remember that in the team of uniform, the team which is wearing a uniform, in that team, Tendulkar, Dhoni, Harbhajan are champions. This team is wearing a uniform. From that team, Tendulkar, Dhoni, Harbhajan are champions. Which team? Team Hindustan. So I say champion Hamari team. Hamari is Hindi word. Hamari means our team. Champion Hamari team. Team Hindustan. So U means which allowance? U means uniform allowance. T means traveling allowance. U means uniform allowance, T means traveling allowance, D means daily allowance, H means helper allowance, A means academic research allowance, C means conveyance allowance. Category B, first C means children education allowance, second is H, helper allowance, third is transport allowance. Category C, T, allowance received by those employees working in transport sector and house rent allowance. So your partly taxable, partly exempt allowance, this is over. So all those allowances which neither fall into the fully exempt category nor they fall into partly taxable, partly exempt will automatically fall into fully taxable category. But very important point to be noted is there are certain allowances in the module which I have not taught you. There also you have certain fixed amount of exemptions that you have to refer from the module, and if you want, maybe I can refer in the class. That will be a waste of time for me. So I am giving you that as homework. Today, after the completion of the class, pick up the module. From that you refer those allowance, border area allowance, remote area allowance, tribal area allowance, island duty allowance, high altitude allowance. All these are different types of allowances which are received generally by people working in military and paramilitary forces. Now let's move on to question number 1. We are moving on to question number 1. See, every solution will be provided to you. Solution for the entire chapter, each and every question will be provided to you. And you know that in income tax, presentation is not a very big challenge. It is always 3 columns, particular amount. If there is some adjustment, write the amount in the inner column. If there is no adjustment, write it in the outer column. So presentation is not a challenge in income tax. So your focus should be on understanding the provision and calculating the amounts. Question number 1. Question number 1. Mr. A is entitled to a basic salary of 5,000 per month. Is it taxable or is it exempt? Definitely it is taxable. Basic salary is fully taxable. And he is also entitled to a dearness allowance of 1,000 rupees per month. Dearness allowance of 1,000 rupees per month is also fully taxable. 40% of which forms part of retirement benefits. What is the meaning of this sentence? 40% of which forms part of retirement benefits? Means 40% dearness allowance is recognized. Do you understand this? Yes or no? Further it says, he is also entitled to house rental allowance of 2000 per month. He actually pays rent of 2000 per month as rent for house in Delhi. See, house rental allowance don't take amount received 2000, amount spent 2000, so nothing is saved, nothing is taxable. No. House rent allowance exemption is as per section 10 clause 13A, lower of following three amounts. You are required to compute the taxable salary assuming that during first 2 months of the previous year he stayed with his father without paying any rent. First 2 months of the previous year means April and May. During April and May, he has stayed with his father in his father's house and he has not paid any rent. So for the first 2 months of the previous year, April and May, he is not eligible to get any exemption. House rent allowance received for the first 2 months is fully taxable. So he is entitled to claim exemption only for 10 months. In other words, when you calculate the exemption under section 10 clause 13A, when you calculate those three amounts, everything should be taken only for 10 months, not for 12 months. Have you understood this? Yes or no? Okay, now listen to me carefully. In the question, they are asking you to find out this amount, income from salary. But since I have not taught you this deduction, you forget about that deduction. You give me the amount of gross salary. From question number 1, you ascertain the amount of gross salary. I can give you maximum 2 minutes time. Take 2 minutes time and get me the amount of gross salary very quickly. Sarvanna says 96,000. Yes, what about others? Are you getting my voice? Yes. Yes. Any one of you have got any answer for gross salary? Soumya, it is not 96,000. Have you calculated the HRA exemption? Have you calculated the HRA exemption? Then who will calculate? HRA you will write in the inner column, na? From that you will deduct the amount of exemption and then you will take that amount to the outer column. For HRA, you are not getting deduction, you are getting exemption. Rakesh says it is 76,000. Let me start. Look here. What is the amount of basic salary? What is the amount of basic salary? 5,000, correct? 5,000 multiplied by 12. That is 60,000. What is the amount of DNS allowance? 1000 into 12. That is 12,000. What is the amount of house rent allowance? 2000 into 12. 24,000. Out of 24,000, some amount will be exempted from tax. So less exempt under section 10
Clause 13A. This will be as per working note number 1. So working note number 1. Exemption is lower of following three amounts. Number 1, rent paid minus 10% of salary. Can you get me what is the amount of rent paid? All this calculation of exemption we are doing for how many months? 10 months. Why? Because first 2 months he has not paid any rent. So he is not eligible to claim exemption. What is the amount of rent paid per month? 2000 for 10 months, it is 20,000. Minus 10% of salary. What do you mean by salary? Salary equals to basic salary plus DA recognized component plus turnover commission. What is basic salary? 5,000 into 10. Don't take 12 months. What is DA? 1,000 rupees. Of that recognized is only 40% into 10. What is turnover commission? 0. So how much amount of salary you are getting? 54,000. Yes or no? Of that you find out 10% of that. That is 5,400. Now 20,000 minus 5,400 is how much? 14,600. Have you all understood this? Number 2 is stays in metro city. So second amount you have to take 50% of salary. Salary you already calculated in point 1. 54,000 into 50% will give you how much? 27,000. Point 3. Actual HRA received for 10 months. How much it is? 2,000 to 10 months, 20,000. Yes. So which one is lower amount out of these three? 14,600 is lower. This amount should be taken in exemption. This amount should be taken here in exemption. 14,600. $14,600 is exempt. So what is the taxable amount of house rent allowance? 24,000 minus 14,600. 9,400. Add all these amounts to get me the amount of gross salary. $60,000 plus 12,000 is 72,000 plus 9,400 is 81,400. Is that clear? From that, we should deduct deductions under section 16. This I have not taught you. First is standard deduction. Under section 16 clause 1A, this is 50,000 rupees. 50,000 or the amount of gross salary whichever is lower. So 50,000 or 81,400 whichever is lower. Second is deduction for entertainment allowance. Deduction for entertainment allowance under section 16 clause 2. In this question, no deduction for this. Point 3, deduction for profession tax. under section 16 clause 3. In this question you don't have the amount. So your income from salary amount will be how much? 31,400. Have you understood this? Yes? So here we have the solution. 60,000 plus 12,000 plus 9,400 is 81,400 minus deduction under section 16 clause 1 income from salaries 31,400. HR exemption is 14,600. And very important note, for the first 2 months he was staying with his father without paying any rent, therefore is not eligible to claim any exemption for April 20 and May 20, that is the first 2 months. Yes, shall I proceed? So now I move on to deductions. Deduction under section 16. See, in the chapter of income from house property, you used to get deduction under section 24. Section 24, you had two clauses, clause A, clause B. Section 24, clause A gave you standard deduction, which was 30% of net annual value. And section 24, clause B gave you deduction with respect to interest on loan taken for acquisition, construction, repairs, renovation or reconstruction of property. Similar to that, here we are having deduction. And here the section of deduction is section 16. In section 16, we are having three clauses, clause 1A, clause 2, clause 3. What is clause 1A? Clause 1A is going to give you standard deduction. See, when you are doing job now, when you are doing job, for that also you may spend lot of money. For example, you completed your chartered accountancy. Now you are doing job with a company. Now say for example, Companies Act is changed. Companies Act 2013 is scrapped and Companies Act 2022 is newly introduced. Now you do not know the provisions of Companies Act 2022. So what you will do now? You will attend the seminar. CA Institute will arrange some seminar. You went there and attended the seminar, but it was a paid seminar, so you paid a fees of 5,000 rupees, so that you can enhance your knowledge with respect to new company law. Because in your job, knowledge of company law is utmost important. So for enhancing your knowledge, you have incurred some cost. That is an expenditure incurred for earning the income. Besides that, you may incur some traveling expenses for going from office to residence, residence to office. In other words, you may incur a lot of small expenses when you are doing a job. All those actual expenses will not be allowed as deduction. In place of all those actual expenses, a fixed deduction will be allowed to everyone who is earning income from salary, and that fixed deduction is termed as standard deduction. What is the amount of standard deduction? 50,000 or the amount of gross salary, whichever is lower. Examiner is not going to remind you saying that deduct the amount of standard deduction. That you have to deduct on your own. No one is going to remind you. The way you deducted standard deduction in the chapter of income from house property, every time at the rate of 30% of net annual value. Similarly, here also you have to deduct standard deduction, which is 50,000 of the amount of gross salary, whichever is lower. So this is the first point. Second point, entertainment allowance. Here you are getting deduction for entertainment allowance. See, exemption and deduction are different. Exemption means some income is not taxable. If an income is not taxable, that will not be taken into account while computing your gross income itself. And deduction means after the gross income, certain amount will be allowed to you as deduction. Generally, deduction is allowed for expenses. Generally, deduction is allowed for expenses. If you recollect, in this allowances flow chart, fully taxable category, you learned something called as entertainment allowance. Why the entertainment allowance is given to you? So that you keep yourself fresh. When you go to the office, you are in same situation. If you work for Monday to Saturday or Monday to Sunday and you don't have some leisure, then when you reach office, you will be bored. So government employer has given you entertainment allowance. Now government says that entertainment allowance falls into fully taxable category. So first of all, it is required to be added to your income. Thereafter, you calculate the gross salary, and from that gross salary, we will give you deduction for entertainment allowance. But very important point to be noted is, deduction is allowed only to government employees. Government employee means central government and state government employees. So only those who are either central government employees or state government employees will get deduction under section 16 clause 2 with respect to entertainment allowance. Meaning thereby, what will happen in case of government employee? If they receive entertainment allowance, first of all, it will be included entirely in the amount of income from salary. While computing gross salary, entire amount of entertainment allowance will be made taxable. Then once you calculate the amount of gross salary, from that you can claim deduction for entertainment allowance as per the rules. So in case of government employee, entertainment allowance will be first included in income, and then you will get deduction. Whereas in case of non-government employee, entertainment allowance will be included in income, but they are not eligible to claim any deduction. So in case of non-government employee, entertainment allowance will be added to income, but no deduction, as a result of which income will increase. What about the central government, state government employee? To them, entertainment allowance is taxable. So you add to income, then you claim deduction. Don't think that amount is added as well as deducted, so it is not having impact on income. It will have impact on income. Why now? Because whatever entertainment allowance you have received, that is fully taxable, it is added to income. But the deduction which you are claiming for entertainment allowance, that deduction is as per the rules. Deduction may not be for the entire amount. The amount of deduction might be less also as compared to the amount received. So it may happen that some amount of entertainment allowance is getting taxed. Are you understanding what I am trying to explain you? So in case of government employee means central government and state government employee, entertainment allowance will be added to income and deduction will also be claimed. Whereas in case of other employees, entertainment allowance will be added to income and deduction will not be allowed. So this says entertainment allowance is first included in salary. Thereafter, deduction is given on following basis, but deduction is given only to government employees. Government employee means central government and state government employees. Deduction will be least of the following. Least means lower of the following. First amount is actual amount of entertainment allowance received. See, whenever you calculate any deduction or whenever you calculate any exemption in this chapter, two amounts are going to remain the same. Number one is, first amount will always be actual amount received. Because your exemption should not exceed your income, your deduction should not exceed your income. Therefore, one amount is fixed and that is actual amount received. Third amount is maximum limit for deduction. Everywhere you will have some maximum limit for deduction or maximum limit for exemption. Your deduction or exemption cannot exceed a particular limit. So that limit will be different limits for different points. Here the maximum limit for deduction is how much? 5,000 per annum. 5,000 per annum. This is the second amount. Then the third amount is 20% of which salary? 20% of basic salary. 20% of basic salary. See, in house rent allowance, while calculating exemption in section 10 clause 13a, you computed salary na, for the purpose of computation of exemption you took salary. That salary included how many components? 3 components. Basic salary, DA recognized, turnover commission. But here it will include only one component, that is basic salary. So third amount is 20% of basic salary. Have you understood this? You have to mug up these rules. Actual amount of entertainment allowance received. This is the first amount. Second amount 5,000 per annum. And third amount is basic salary into 1 by 5 or 20% of basic salary. Out of these 3 amount, whichever is lower will be the amount of deduction. That will be the amount of deduction. So we can say that entertainment allowance is taxable for all employees, but deductible only for government employees. Deduction is allowed only for government employees. Is that very, very clear? Yes or no? So how many deductions are allowed? In section 16, how many deductions are allowed? 3 deductions. First is section 16 clause 1a, standard deduction, which is 50,000 maximum. Second is deduction for entertainment allowance under section 16 clause 2. And third is deduction for profession tax. So let us move on to this third point. Deduction under section 16 clause 3. This is deduction for profession tax. First of all, what is profession tax? Profession tax is a tax levied by the state government on every person who is employed in this particular state. See, state government is putting huge amount of efforts to ensure that industries are set up in this particular state. So, if you have got an employment opportunity in this state, it is not only because of your capability, it is also because the state is taking so much amount of effort to ensure that there is economic activities in this state. More the economic activities, more the opportunities. So, since state government is putting so much amount of efforts to ensure that more economic activities are taking place in that particular state, state government is levying a tax called as profession tax. Profession tax is not only on professional people, it is on everyone. Every person who is employed in this state has to pay profession tax to the state government. Profession tax is nothing but tax on employment. Profession tax is nothing but tax on employment. This word employment includes self-employment. Employment includes self-employment. Meaning thereby, person who is doing a job has to pay profession tax. Even the person who is self-employed, he also has to pay profession tax. Person who is doing a job now, his profession tax will be deducted by his employer from his salary and it will be paid to the state government. And person who is self-employed, he has to take his own professional tax registration number and he has to pay profession tax. So that profession tax is allowed as deduction while computing income from salaries. And very important point to be noted here is deduction for profession tax is allowed on payment basis. Now you can correlate the provisions. In the chapter of income from house property, deduction for municipal tax was allowed on payment basis. In the chapter of profits and gains of business profession, there was a list of section for which deduction was allowed on payment basis, and that list was given in section 43B. Similarly, here also deduction for profession tax is available on payment basis. And if question is silent as to whether the profession tax is paid or not paid, it is just mentioning profession tax. Then in that case, you take an assumption that yes, it is paid. Payment is actually made. So you can claim deduction for that amount. Yes, is that very clear? Yes or no? Everyone should drop a message. If you have doubt, drop your doubt. Otherwise, drop the message saying that yes, you have understood. Next, now listen to me very carefully. This discussion which I will be having with you, this discussion will not be covered by any of the textbook, etc. No discussion in module, there is no such discussion in any of the textbook. I have covered up this topic specifically in these notes. Now listen to me carefully. See, all those people who are doing job now, their profession tax, employer will deduct from their salary and pay it to the state government. And those people who are self-employed, their profession tax they themselves have to pay. They have to register themselves with the profession tax department and they have to pay profession tax. So for example, doctor, lawyer, chartered accountant who are practicing, they have to get the registration number for profession tax and they have to pay profession tax. But those people who are doing job, they don't have to take any registration number. Their employer will deduct profession tax from their salary and employer will pay to the government. Which government? Definitely the state government. Now my point is, profession tax is a tax levied by the state government and state government has asked the employer to deduct the profession tax from salary paid to employees. So generally, employer while paying salary to employee would deduct the profession tax and he would pay profession tax to the state government. Now my question to you is, if your employer says that your profession tax I will not deduct from your salary, your employer says you that your profession tax ideally I should deduct from salary and pay to the state government, but instead of that I will pay from my own pocket. So if your employer agrees with you that he will not deduct profession tax from salary paid to you and he will pay profession tax out of his own pocket, don't you feel you have got some more benefit? Yes or no? If someone else is paying your profession tax, don't you feel you have got more benefit? Definitely yes. If you have got more benefit, then your income should be more. That is what we need to understand here in this case number 1 and case number 2. Examples, following examples will help you to understand the tax treatment of profession tax while calculating income from salary. Case 1, profession tax is paid by employer after deducting from employee's salary. Profession tax is paid by employer after deducting from employee's salary. In other words, he is not paying profession tax from his own pocket. He is deducting from your salary and he is paying it to the government. So in the question, what will appear? Question, see this is the example. They are saying basic salary per month is 15,000. Taxable allowance is 60,000. Again, this taxable allowance, they have not used the word per month. So this is for the entire year. And then you have a profession tax 2,400. In your question, profession tax is appearing once. And they have used the word profession tax only. Who has paid na? That is not given. Who has paid is not given means normally whatever happens will happen. In other words, employer will deduct profession tax from salary paid to you and that amount he will pay to the government. He is not going to pay the amount of profession tax from his own pocket. He will deduct from your salary. In that case, how the solution will look like? Calculation of income from salary. Basic salary will be 1,80,000. That is 15,000 per month multiplied by 12 months. Your taxable allowance is 60,000. You take the total of both, that is 2,40,000. From that you claim deduction under section 16 clause 3 for profession tax. That is 2,400 and the balance income from salary is 237,600. Have you understood the presentation? Yes or no? So in the first case, profession tax is paid by employer after deducting from employee's salary. In such cases, profession tax is appearing only once in the solution in the form of deduction. Now let's move on to the second case. Second case says profession tax is paid by employer out of own pocket. When we say profession tax is paid by employer out of own pocket means it is paid to the state government without deducting from employee's salary. Profession tax is not deducted from employee's salary. Employer has paid that profession tax out of his own pocket. In that case, in our solution, profession tax should appear twice. Step number 1, whatever profession tax is paid by employer is nothing but a benefit given by employer to the employee. Therefore, it is considered as a perquisite. Perquisite is nothing but benefit. And since this profession tax is paid by employer, it is an added advantage to you. It is an additional benefit given by employer to you. In that case, the amount of profession tax will be added to salary income. Profession tax will be added to salary income. While computing income from salary, first of all, we'll add a profession tax to your income. Thereafter, you can claim deduction for profession tax in section 16 clause 3. Thereafter, you can claim deduction for profession tax in section 16 clause 3. Let us have a look how the profession tax would appear in the question. Say for example, question says your basic salary is 15,000 per month, taxable allowance is 60,000 per month and profession tax paid by employer is 2,400. This clearly says that profession tax is paid by employer. Profession tax is paid by employer. In that case, how this would appear in the solution? It would appear twice in the solution. So how your solution will look like? First you will take up basic salary 1,80,000, 15,000 per month multiplied by 12 months. So that is 180. Taxable allowance 60,000 for the entire year. Then you will add your profession tax paid by employer. This profession tax paid by employer is additional benefit given by employer to you. So this amount is required to be added to income. So I added 2,400 here. So I get the amount of gross salary as 2,42,400. From that you will get deduction for profession tax in section 16 clause 3, 2,400 and the amount derived is nothing but income from salaries. So if you compare the first and the second case, then in the first case your income from salary amount is 2,37,600, whereas in the second case your income from salary amount is 2,40,000. Your income from salary amount is more in case 2 as compared to case 1 by how much amount? 2,400. Why it is more by 2,400? Because in second case, employer has paid profession tax out of his own pocket. So that is the additional benefit given by employer to you. So that amount of additional benefit should be added to your income. Your income should appear more by 2,400. That is what is happening in the second case. Have you understood this very clearly? Yes or no? So if the question is silent, profession tax is paid by employer after deducting from your salary. In that case, profession tax should appear only once in your solution. That is while claiming deduction in section 16 clause 3. But if question clearly says that profession tax is paid by employer, they are using the word profession tax paid by employer, but you should take the meaning as profession tax paid as well as borne by employer. Employer is bearing the profession tax. He is not deducting from your salary, he is bearing the profession tax. In that case, profession tax will be added to your salary income, and at the same time you can also claim deduction under section 16 clause 3. Is that very clear 100%? So we have completed the concept of deductions here. Deduction is over. Deduction is over. Now we need to move on to the concept of retirement fund called as provident fund or approved superannuation fund. Provident fund and approved superannuation fund. See, this chapter of income from salary is from the point of view of employee. The chapter of profits and gains of business profession was from the point of view of employer, whereas chapter of income from salary is from the point of view of employee. So here in this topic we are going to discuss what is the tax treatment. What is the tax treatment of different forms of retirement benefits in the hands of employee. What is the tax treatment in the hands of employee? That is what we need to discuss. Now tell me, in provident fund, who is going to contribute? Who is going to contribute in this provident fund? What is provident fund? Provident fund is a retirement benefit, yes or no? Provident fund is nothing but a retirement fund. In this, employer as well as employee both will contribute. Employer as well as employee both will contribute. Then this amount will be invested. This amount will be invested. Then you will have investments. If you invest this amount, you will have investments. Fund is invested, you will have investments. If you have investments, you will have income. This income can be in the nature of interest. Correct? This income you are not going to receive. This income will be added to the fund. This will be added to the fund only. This income will be added to the fund only. And when the employee retires, when the employee retires, that entire fund balance is given to employee. Entire provident fund balance is given to employee. In this entire process, there are four things involved, or we can say that there are four different constituents or components. Number one is employees' contribution to the fund. Number two is employer's contribution to the fund. Screen is not proper. Now is it proper? Dikshit? For others it is proper only. For now it is okay? Very good. So in this entire process, there are four things involved. Number one, employees contributing money. Employees contributing. Employer is also contributing. Both are contributing. So we have employees contribution, we have employer's contribution. Then this fund will be invested, income will be earned. Which income? Interest income will be earned. So third point is interest on provident fund. And fourth point is when employee retires, fund balance will be given to employee. So first point is employees contribution. First point is employees contribution. Second point is employer's contribution. Third point is interest income generated from the investments. And fourth point is PF balance which is given to employee at the time of retirement. So there are four things. So point 4 is lump sum payment to whom? To employee. When? On retirement. So here we need to discuss what is the tax treatment of these four things. What is the tax treatment of these four things? What is the tax treatment of employees' contribution? What is the tax treatment of employer's contribution? What is the tax treatment of interest earned on the provident fund balance? And what is the tax treatment when the provident fund balance is entirely given to the employee at the time of retirement? We have to discuss the tax treatment of these four components of provident fund, and this discussion is going to happen from the point of view of employee, not from the point of view of employer. Have you understood this? Yes or no? In provident fund, employer employee both will contribute. That fund will be invested, interest will be earned, and whatever is the provident fund balance will be given to the employee at the time of retirement. So we need to discuss what is the tax treatment of employee contribution, what is the tax treatment of employer contribution, what is the tax treatment of interest credited to the fund, and what is the tax treatment of lump sum payment on retirement. We need to discuss the tax treatment of four different components of fund. So I move on to these notes. On the left hand side, we have four different components. Number one is employees' contribution to the provident fund. Number two is employer's contribution to the provident fund. Number 3 is interest credited to the provident fund. And number 4 is lump sum amount received by employee from the provident fund at the time of retirement. So we have to discuss tax treatment of 4 different components relating to provident fund. And this tax treatment we are going to discuss from the point of view of employee, not from the point of view of employer. And we also have different types of provident fund. We have different types of provident fund. So for all different types of provident fund, we have to discuss tax treatment of 4 different components of provident fund. We have to discuss what? Tax treatment of 4 different components of provident fund. Shall we proceed with our discussion? Have you understood whatever I have explained to you till now? Yes or no? Okay. So let us proceed. The first type of provident fund is called as statutory provident fund. First type of provident fund is called as what? Statutory provident fund. The concept of statutory provident fund came in the year 1925 with the introduction of Provident Fund Act 1925. Provident Fund Act 1925 came in the 1925, and this act was made applicable to government and semi-government employees. When we say government employee, generally we mean to say central government and state government employees. And semi-government employee means RBI employee, employee of nationalized bank, employee of government companies, faculties of aided college, all these are semi-government employees. Employees of municipal corporation, they are semi-government employees. I do not know whether you have realized or not, but just few minutes back we had a discussion on entertainment allowance. We had a discussion on entertainment allowance. Deduction for entertainment allowance is allowed to which employee? Only to government employee. What is the meaning of government employee there? Government employee means central government and state government employee. Who all are central government employees? Who all are state government employees? Central government employee means an employee who is receiving salary, who is receiving remuneration directly from the central government. And state government employee means an employee who is receiving remuneration directly from the bank account of the state government. Employee of ONGC is not going to receive salary from government. He'll receive salary from ONGC. Employee of RBI will not receive salary from government. He will receive salary from RBI. Employee of a teacher of a college, of a aided college, will not receive salary from government. He will receive salary from college. Employee of municipal corporation will not receive salary from government. He will receive salary from municipal corporation. So you are considered as government employee only when you receive salary from government directly. For example, people working with Indian Post Office, Indian Postal Services, people working with Indian Railways, different people working with different ministries, Army, Navy, Air Force, Income Tax Department, GST Department, all those people working here, they are central government employees. Police force is a state government employee. Are you understanding? So those people who are working salary or remuneration directly from the central government or state government, they will be called as a government employee. But employees of nationalized bank, employees of government companies, employee of RBI, These people are not called as government employee, they are called as semi-government employee. Semi-government employee means they are not receiving salary from government, but all their benefits etc. are similar to the benefits which are given to the government employees. So this concept of statutory provident fund came in the year 1925 for which employee? Not only for government employee but also for semi-government employees. Have you understood this? Have you understood that there is a difference between a semi-government employee and a government employee? Entertainment allowance deduction is allowed only to government employee, it is not allowed to semi-government employees. Semi-government employee cannot claim deduction for entertainment allowance. So, definition of a government employee is different at different places. Definition of a government employee is different at different places. When we talk about entertainment allowance, government employee means only central government and state government employees. When we talk about statutory provident fund, government employee means central government employees, state government employees and semi-government employees. So, government employee definition is different at different places. So, now let us discuss this statutory provident fund. 4 components from the point of view of employee. First is what is the tax treatment of employees' contribution. So my question to you is, what is employees' contribution for employee? Employee's own contribution to the provident fund is what for employee? Is it an income for employee? Is it an expense for employee? Is it an asset for employee? Is it a liability for employee? What it is for employee himself? Yes, income, expense, asset, liability, investment, loss, what it is? When a government employee is contributing to provident fund, do you believe that it is his income? What it is for him? Are you understanding the question? Have you understood the question? You tell me why the people would invest in provident fund? Why the people would invest in provident fund? What is the purpose? What is the objective? The objective is to get some retirement benefit, na? For a future benefit, you are investing money in the present period. So what is that for you? Is it an expenditure? No, it is not an expenditure. It is an investment for your better future. It is an investment. It is neither an expense nor an income. It is an investment. It is an asset which you are creating for you. In future, you are going to get huge amount of money from this provident fund. So right now you are investing for your better future. So for an employee, his own contribution in the provident fund is an investment. For this investment, government wants to give you incentive. So government has given you incentive in the form of deduction. Deduction where? Under which section? Under section 80C. Section 80C deduction is allowed from your gross total income. So, when you invest money in provident fund, you are investing for your own future. You are investing for your better future. For this investment, government wants to provide some incentive. So, government has come out with deduction under section 80C. So, question is, in case of government employee, whatever amount is being contributed by him to provident fund called a statutory provident fund, can he claim deduction under section 80C for that amount? Answer is yes. He can claim the deduction. Deduction is available. Deduction is allowed. Yes, is that very clear? Yes or no? Yes or no? Let's move on to second part. Second component is employer's contribution. Now tell me, what is employer's contribution for employee? What is employer's contribution for employee? Is it an income? Is it a liability? Is it an expense? What it is? Sarvanna, I am not asking you what is employer's contribution for employer. I am asking you what is employer's contribution for employee. Yes, it is income. So it is not an expense, it is income. Since it is an income, question arises whether that income is taxable or it is exempt. Whether that income is taxable or it is exempt. So what is the answer? That income is totally exempt. Whatever amount employer, who is employer here? Employer is either a government or a semi-government institution. Employer is either a government or semi-government institution. Whatever employer is contributing, whatever amount employer is contributing, that is considered as an income for employee and is totally exempt from tax. Third point, whatever contribution is there in the provident fund, that provident fund balance, employer employee both are contributed, whatever is the balance in the provident fund, that will be invested somewhere. On that some interest will be earned. That interest will not be given to employee. It will be credited to the fund. If you recollect, in sinking fund investment method in case of depreciation, the amount of interest which is earned is automatically added to sinking fund. Similarly here, whatever interest is earned will be added to the fund and it will be reinvested. Right now, employee is not going to receive that amount. He will receive that amount at the time of retirement in lump sum. So right now, while he is doing job, the interest which is getting accrued on the investment made out of the fund balance, that interest will be added to the fund. But that interest is an income for employee. That interest is an income for employee. Therefore, the question arises whether that income is exempt or whether that income is taxable. So the answer is that income is totally exempt from tax. It is totally exempt from tax. See, now out of these four components, three components, 1, 2 and 3, three components, tax treatment is given while you are doing job. While you are in employment, every month from your salary, you will contribute certain amount. Employer will also contribute. This amount will be invested. On that interest will be earned. So all this thing is happening while you are doing job, while you are in employment. Fourth point will occur at the time of retirement. So now we have retired. Whatever is the balance lying in the provident fund, that entire balance will be given to you. Whatever is the balance of the fund, entire balance will be given to you at the time of retirement. We say that it is lump sum payment received by employee on retirement or on resignation. This lump sum payment is an income of employee. Therefore, the question arises whether this income is taxable or whether this income is exempt. So answer is, this is exempt from tax in section 10 clause 11. This is exempt from tax in section 10 clause 11. Have you understood this? Say yes or no. So we have completed our discussion with respect to four different components of provident fund from the point of view of employee. And we have discussed this for which type of provident fund? Statutory provident fund. Statutory provident fund is for whom?
for government and semi-government employees. It is a retirement fund created by the government for their own employees, created by semi-government organizations for their own employees. Employees contribution deduction is allowed in section 80C. Employer's contribution is income for employee. It is fully exempt from tax. Interest credited to the fund is also an income of employee. That is also fully exempt from tax. And amount withdrawn from the fund at the time of retirement is also an income of the employee, and that is also fully exempt from tax. By now you might have realized why people are dying or running behind the government jobs. Why people are dying for government jobs, or why they are running behind the government jobs, you might have realized. Government job will get more salary, less work, entertainment allowance deduction will be there, statutory provident fund exemption will be there. Lot of benefits are there. Salary chapter na government employee, lot of benefits are there. Shall I proceed further? So right now I had a discussion with you for one of the provident fund called as statutory provident fund. Statutory provident fund was created for the benefit of government employees and semi-government employees. The statutory provident fund concept came in the year 1925. Thereafter, after 27 years, it took 27 years for the government to realize that even those people who are working in the private sector, they also have the retirement life. They should also get the advantage of this provident fund. For realizing this, government took 27 years of time. So exactly after 27 years, government came out with an act called as Employees Provident Fund and Miscellaneous Provisions Act 1952. Government came out with an act called as Employees Provident Fund and Miscellaneous Provisions Act 1952. So, Employees Provident Fund and Miscellaneous Provisions Act 1952. 1952, government came out with this act, and government said that any organization hiring 20 or more employees, any organization hiring how many employees? 20 or more employees, they have to create provident fund. Any organization hiring 20 or more employees, to them Employees Provident Fund and Miscellaneous Provision Act will be applicable, and they have to create provident fund for the benefit of their employees. They have to create provident fund for the benefit of their employees mandatorily. Now, say for example, provident fund is created. Provident fund will be created under which act? It will be created under Employees Provident Fund and Miscellaneous Provisions Act. Thereafter, income tax says that you register this provident fund with the income tax department. You also do the registration of this provident fund with the income tax department. If this is registered under Income Tax Act, then this will be called as a
recognized provident fund. This will be called as what? Recognized provident fund. And on the other hand, if it is not registered, if it is not registered under the Income Tax Act, then it will be called as unrecognized provident fund. Then it will be called as what? Unrecognized provident fund. So, from the year 1952, it was made mandatory for every organization to maintain the provident fund, retirement fund for the benefit of their employees if they have hired 20 or more persons. And at the same time, government asked all those employers to get their fund registered with the income tax department. If they register themselves with the income tax department, their fund will be called as recognized provident fund. If they don't register with the income tax department, their fund will be called as unrecognized provident fund. Very important point to be noted here is, what is the advantage of registering the fund with the income tax department? If you register your provident fund with the income tax department, it will be recognized, meaning thereby that fund will enjoy a lot of deduction and exemption. Income Tax Act will give you benefit of exemption and deduction if the fund is recognized. If the fund is unrecognized, then Income Tax Act will not give you any exemption, it will not give you any deduction. Yes, have you understood this? Yes or no? Yes. So next two provident funds are which one? Recognized provident fund and unrecognized provident fund. Recognized provident fund, unrecognized provident fund, both type of provident funds are there only in case of private sector employee. Like government employee, you will always have statutory provident fund. Private sector employee, if the fund is registered with the income tax department, it will be termed as recognized. If it is not registered with the income tax department under the Income Tax Act, it will be called as unrecognized. First, let us try to understand what is the tax treatment of four components. What is the tax treatment of four components in case of recognized provident fund? First component is employees' contribution. Whatever employee is contributing to this recognized provident fund is an investment for the employee. For that investment, government is offering a incentive in the form of deduction under Section 80C. So yes, here also Section 80C deduction will be allowed. Here also Section 80C deduction will be allowed. Number two, employer's contribution to this recognized provident fund. Definitely it is an income of employee. In case of statutory provident fund, this income was totally exempt from tax. But in this case of a recognized provident fund, whatever amount employer is contributing is an income of employee, but it is not totally exempt from tax. It is exempt only up to certain limit. If the employer contribution is beyond a certain limit, then that will be taxable. Excess amount will become taxable. So question is, how much is exempt, how much is taxable? So here we say it is exempt up to 12% of your salary. If your employer contributes to your provident fund up to 12% of your salary, then that amount will be exempted in your hands, tax will not be levied. If he is contributing more than 12% of your salary, then up to 12% you will enjoy the exemption. Beyond 12%, what is the excess amount now? That excess amount will become taxable. That excess amount will become taxable. Now question may arise, what do you mean by salary? You are saying that it is exemption up to 12% of salary. What do you mean by salary? You should include those old three components only in salary. Do you recollect house rent allowance? House rent allowance. Exemption is lower of following three amount: rent paid minus 10% of salary, metro 50% of salary, non-metro 40% of salary. Actual HRA received, whichever is lower, is exempt from tax. There you took what in salary? Which components you took in salary? Basic salary, DA recognized, turnover commission. Here also you take the same three components. So you take basic salary, you take DA recognized, you take turnover commission, add basic salary, DA recognized, turnover commission. Of that, you ascertain 12 percentage. Up to that amount, you will enjoy the exemption. Over and above that amount, employer contribution will become taxable. So in case of government employee, employer's contribution to the provident fund is totally 100% exempt from tax. In case of private sector employee, it is partially exempt, partially taxable. Yes, have you understood this? See, I am explaining you provision. If you have understood, say yes. If you have not understood, say no. If you want me to take example, say yes, sir, take example. If you have not understood, if you want me to take some numbers, I can take the numbers and explain you. See, there are certain things which you can understand without taking the numerical example, and there are certain things which you can understand only if I take the numerical example. So, wherever necessary, I would definitely take the numerical example. If you recollect that children education allowance per month per child, and only if per month what is appearing, that if I don't take example, you will not understand at all. So wherever necessary, I am definitely taking the examples, but still if you feel that you have not understood, I can take example for any point. So it should respond. So employer's contribution to which fund? Employer's contribution to recognize the provident fund is an income of employee. It is partially exempt, partially taxable. To what extent it is exempt? Up to 12% of salary it is exempt. Excess is taxable. What do you mean by salary? Salary means same old definition which we took in house rent allowance. That is basic salary, DA recognized, turnover commission. Take basic salary, DA recognized, turnover commission, add up that. Of that you ascertain 12% amount. Up to that amount, employer's contribution to recognized provident fund RPF will be exempt from tax. Anything beyond that will become taxable. Third point, interest credited to the fund. What is third point? Interest credited to the fund. What is the treatment of interest credited to the fund? In case of statutory provident fund, it was totally exempt from tax. 100% exemption. What about the recognized provident fund? It is partially exempt, partially taxable. See, government is doing partiality. They are giving more exemption to government employees, less exemption to private sector employees. So, in case of recognized provident fund, whatever interest is earned now, in that also it is partially exempt, partially taxable. How much is exempt, how much is taxable? Interest calculated at the rate of 9.5% per annum is exempt. Interest calculated up to 9.5% per annum is exempt. If the interest credited to the fund is more than 9.5% per annum, then excess will become taxable. For example, listen to me very carefully. I am asking you a question. In the examination, if examiner says interest credited to recognized provident fund is at the rate of 10% per annum, amounting to rupees 50,000. What you will do? Out of 50, how much is exempt, how much is taxable? Yes. Interest credited to recognized provident fund is calculated at the rate of 10% per annum and it is amounting to 50,000 rupees. So out of that, how much is exempt, how much is taxable? Aditi has given the answer as 4750. She is of the opinion that 4750 is exempt. Akshay also says 4750 is exempt. 250 is taxable. Have you understood the question very clearly? I don't think so. Listen to me carefully. What it says? Interest credited to recognized provident fund. Interest is credited to recognized provident fund. That interest is calculated at the rate of 10% per annum. And that interest is amounting to 50,000 rupees. What is this 50,000? Is it the balance of the fund or is it the amount of interest? It is the amount of interest, it is not the balance of the fund. But tell me, interest is calculated on what? Interest is calculated on what? Balance of the fund, na? On the balance of the fund, interest will be calculated. But that balance of the fund is not given to you in the question. Balance of the fund is not given to you in the question. But you know that up to 9.5% per annum is exempt. If you want to find out the balance of the fund, you can find out. See, fund balance is not given to you in the question. Rate of interest is given to you in the question as 10% per annum. And the amount of interest is given to you as 50,000 rupees. This 50,000 is calculated at the rate of 10%. So what is the amount of fund? 5 lakhs. Yes or no? Up to 9.5% is exempt, na? 9.5% of what? 9.5% of 5 lakhs. So how much is exempt? Tell me. 47,500 is exempt. 47,500 is exempt. People are calculating 9.5% of 50,000. That 50,000 itself is 10%. Are you understanding? Those who are giving the answer as 4750, have you understood? You calculate 9.5% of these 5 lakhs. But this 5 lakh is not given to you in the question. And also, there is no need to find out this amount. Without this also you can calculate. Just do the cross multiplication. Interest amount is 50,000. This is calculated by applying 10%. Exemption is at the rate of 9.5%. What is the amount proportionate to 9.5%? Is 47,500. Yes or no? Hey, have you understood? Next. So, interest calculated at the rate of 9.5% per annum is exempt, excess is taxable. What is the treatment about? Lump sum amount received from the recognized provident fund at the time of retirement. If you retire at the time of retirement, whatever is the balance lying in the fund, lump sum amount will be given to you. That is your income. Is it taxable or is it exempt? In case of statutory provident fund, in case of government employee, it was totally exempt from tax in section 10 clause 11. Here also it is totally exempt from tax in section 10 clause 12. But here the exemption is conditional exemption. The exemption is conditional exemption. What is the condition now? Condition is employee should have rendered services for 5 continuous years. Employee should have rendered services for 5 continuous years. Say for example, Manoj completed his chartered accountancy. Acha, listen to me. Are you aware about it or not? I do not know. That I am just telling you. The word retirement which is used here, at the time of retirement, you will receive the lump sum amount. The word retirement which is used in the Income Tax Act includes different things. Generally, what do you understand by the term retirement? You understand that employee has achieved a age of 60 years and now he is retiring from the job. Yes, that is retirement. That is called as retirement by superannuation. That is called as what? Retirement by superannuation. Even if you resign from the organization, even if you resign, you leave the current organization and you join a job in some other organization, that is also called as retirement. That is called as retirement by resignation. That is called as what? Retirement by resignation. And say for example, you left this world, that is also retirement. Forget about the job. You have retired from your life. So when we use the word retirement in income tax, it means or it includes retirement by superannuation, retirement by resignation, as well as retirement by death. So you can retire in any of these modes, in any of these ways. At the time of retirement, whatever balance you have received from the recognized provident fund is totally exempt from tax, subject to one condition. What is that condition? Employee should have rendered services for 5 continuous years. Now say for example, Manoj has completed his chartered accountancy. After becoming CA, he has joined an ICICI bank as an employee. There he worked for 3 years. Now he has left ICICI bank. Now he has joined Reliance Industries. He has left ICICI bank and he has joined Reliance Industries. Now ICICI bank was maintaining a recognized provident fund for Manoj. ICICI bank has maintained a recognized provident fund for its all employees. So Manoj is resigning from the employment. He is withdrawing money from the recognized provident fund. What will be the treatment? Whatever amount is withdrawn will become fully taxable because Manoj has not rendered services for 5 continuous years. He has resigned after 3 years. So that 5 continuous years condition is not fulfilled. So if Manoj is withdrawing money from the fund now, that will become taxable to him. If Manoj doesn't want to pay the tax, then what Manoj can do now? Manoj has resigned from ICICI Bank and he has joined Reliance Industries, so he can transfer the fund balance. He can transfer his provident fund balance lying with ICICI Bank to provident fund balance of Reliance Industries. He can transfer his fund balance from his old employer to the new employer. In that case, we say that it is not withdrawn, it is transferred. On transfer, there is no tax. On transfer, there is no tax. But if you withdraw, it is taxable if 5 years of continuous service condition is not fulfilled. Have you understood this? Yes or no? Now, let me extend the same example. Same example I am extending slightly. Say for example, Manoj is working with ICICI Bank. After 3 years, he has given the resignation and he has joined Reliance Industries. He has transferred his provident fund balance from ICICI Bank to Reliance Industries. So on this transfer, there is no tax. Now with Reliance Industries also, he worked for 3 years. Now from Reliance Industries also he is resigning and he is joining Tata Group company.
At the time of resignation from Reliance Industries, he has withdrawn money from the recognized provident fund. Amount withdrawn from the recognized provident fund is exempt, subject to the condition that employee should have rendered services for 5 continuous years. Do you believe Manoj has rendered services for 5 continuous years? Yes or no? Have you understood the question? Or you have not understood the question? Oh, tell me yes or no. Once again. Listen to me carefully. Listen to me very carefully. I told you that Manoj, after completing his chartered accountancy, has joined as an employee of ICICI Bank Limited. He worked with ICICI Bank for 3 years. At the end of year number 3, he has resigned from ICICI Bank. He has resigned from ICICI Bank. If he withdraws money from the provident fund while he is resigning from ICICI Bank, then whatever amount he withdraws will become taxable because he has rendered services for only 3 years. Now I am telling you that at the time of resigning from ICICI Bank, he has not withdrawn money from the provident fund. He has joined a new employment with Reliance Industries Limited. And what he has done, whatever fund balance, whatever provident fund balance was lying with the ICICI Bank, he has transferred that fund from ICICI Bank to Reliance Industries. So he has transferred his fund from old employer to new employer. Now he is working with whom? Now he is working with Reliance Industries. With Reliance Industries also, he worked for 3 years. Now he is resigning from Reliance Industries also. Now my question to you is, at the time of resignation from Reliance Industries, he has withdrawn money from the fund. Will it be exempted or will it be taxable? The condition is exemption will be given if employee has rendered services for 5 continuous years. Question is, do you believe that Manoj has rendered services for 5 continuous years? First of all, tell me, have you understood the question? Bhaskar, what do you mean by no? No means what? You have not understood the question? You have not understood the question or you have understood the question and you are saying me answer as no? Oh, answer is no. Okay. So question is, while he withdraws money from the provident fund, while he resigns from the Reliance Industries Limited, he has withdrawn money from the provident fund. Will it be taxable or will it be exempt? So answer is, if he has rendered services for 5 continuous years, it is exempt. If he has not rendered services for 5 continuous years, it is taxable. So the question is, he has rendered services for how many years? He has rendered services to Reliance Industries for 3 years. But whatever amount he is withdrawing from the provident fund from the Reliance Industries Limited, that amount also includes, the amount which he had transferred from his previous employer ICICI Bank Limited, yes or no? The amount which Manoj is withdrawing at the time of resignation from Reliance Industries, that amount also includes the amount of money which he had transferred from his old employer ICICI Bank Limited. So when you withdraw money and that amount also includes amount which you had transferred from your old employer to the new employer, in that case, while checking the condition as to whether 5 years of continuous service is fulfilled or not, you should also include the period for which you have rendered services to your former employer, previous employer.
Because the fund balance includes the fund of ICICI Bank as well as Reliance, na? So the period should also include both. Have you understood this? So you work, Manoj has worked with ICICI Bank for 3 years, with Reliance for 3 years, combined he has worked for 6 years. So now if Manoj withdraws money, then that is not going to be taxed because 5 years of continuous service condition is fulfilled, because that fund includes provident fund balance of the current employer as well as the previous employer. The period should also include the period for which the service is rendered to the current employer as well as the previous employer. Have you understood this very clearly? One employee can be benefited by two or Kritika, I don't want to answer this right now. Actually, I have not understood the question properly, what you are writing. One employee can be benefited by two or more, 2 or 3 PF. Are you trying to ask a question whether an employee can have multiple provident fund accounts? Is that the question? Whether an employee can have multiple provident fund accounts? Yes. I will answer the question at the end, because we have we have unrecognized provident fund, we have public provident fund to discuss. Once we complete that, I'll answer your question. But tell me, have you understood the treatment of different components of provident fund in case of recognized provident fund very clearly? Amount withdrawn from recognized provident fund at the time of resignation, death, retirement, retirement by superannuation, retirement by death, retirement by resignation. Amount withdrawn is exempt from tax if employee has rendered services for 5 continuous years. And while computing the term of 5 continuous years, the balance of the fund includes the balance from the previous employer, then the period of service shall also include the period for which the services are rendered to the previous employer. And if that combined period is more than 5 years, then condition of 5 years is fulfilled, exemption will be granted. Dikshit, I am giving break in span of 1 minute's time. 1 minute. Let me complete this RPF at least. Now say for example, I'm similar example, I'm just completing this RPF and then we'll have a break. I need to stop somewhere at a logical point. Now say for example, Manoj has completed his chartered accountancy, now he is working with Reliance Industries and this is his first job. This is his first job. He has worked with Reliance Industries for say 2 years, and during a particular year, he saw that Saturday, Sunday is anyway having holiday, but Monday, Tuesday, Wednesday is a public holiday. So for 5 continuous days now, there is a holiday. So Manoj went at some place with his family for a leisure travel. Manoj went at some place, say Ooty, etc. with his family. When Manoj was coming back, he met with an accident. They were coming back by a car and Manoj met with an accident. In that accident, Manoj has lost his both hands. Now Manoj was working with a Reliance Industries as an accountant. So he is required to sit in front of a computer for 8 hours. He has to maintain the accounts. Now in an accident, he has lost his both hands. Can he work as an accountant now? Yes. Can he work as an accountant? He has met with an accident and he has lost his both hands. No, he can't work as an accountant. Now he has to forcefully accept the retirement. He has to forcefully accept the retirement. So now he has forcefully accepted the retirement. He has not worked for 5 continuous years. He has worked only for 2 or 3 years. Now he is forcefully accepting the retirement. So he has withdrawn money from the provident fund. Should we levy tax? Government says no, don't levy the tax, because even though 5 years of continuous service condition is not fulfilled, we will not levy the tax, because this situation is not in the control of employee. This situation is not in the control of employee. Have you understood this? Yes or no? Last point. Last point. For example, the organization with which Manoj was working now, that organization is shutting down the business. Say for example, Manoj is working as an employee of a particular company. He has worked for 3 years with that company, and at the beginning of year number 4, company has shut down the business. Business is closed down. So Manoj has to forcefully resign. So he has withdrawn money from the provident fund. 5 years of continuous service condition is not fulfilled. Should we levy tax or should we give him exemption? Yes. Government says even though 5 years of continuous service condition is not fulfilled, we will not levy the tax, we will give him exemption, because this situation is also not within his control. This situation also is not within his control. Yes, is that very, very clear? All these things which I have explained you, they are written here in note number 2. So here, listen to me carefully. Here in this recognized provident fund, here I have written note 1. And here I have written note 2 and 3. From this you remove and 3. It is only note 2. From this you remove and 3. It is only note 2. I have explained you note 2. You can read that note 2 at home. Here, next column, unrecognized provident fund, instead of note 4, this should be note 3. It should be note 3. Because there is no note 4 here. Yes, is that very, very clear? Statutory provident fund, recognized provident fund is over. Okay. So before the break, we had a discussion with respect to statutory provident fund and recognized provident fund. Now we move on to the third category of fund called as unrecognized provident fund. Unrecognized provident fund. Unrecognized provident fund is a provident fund created by the private sector organization, but the only thing is this fund is not registered with the income tax department, and therefore it is called as unrecognized provident fund. What is the disadvantage of unrecognized provident fund? You are not going to get the benefit of exemption and deduction. Benefit of exemption and deduction will not be granted to you. So if employee is contributing to unrecognized provident fund, can he claim deduction under section 80C for his own contribution? Answer is no, deduction is not available. Employer's contribution to unrecognized provident fund and interest credited to the fund, these two things are income for the employee. Government is having an intention to levy the tax, but since these funds are not registered with the income tax department, for the income tax department, this fund is untraceable. It is not traceable. Do you understand? Not traceable. In the chapter of redemption of provident fund, in accountancy, in the chapter of redemption of provident fund, in accountancy, in the chapter of redemption of preferences, you might have come across an adjustment, shareholders holding 100 shares are not traceable. Yes or no? Have you learned the chapter of redemption of preferences? Redemption of preferences. In that redemption of preferences chapter, you might have come across an adjustment saying that shareholders holding 100 shares are not traceable. Not traceable means we could not pay back money to them. We had sent a check to their residence. No, this foundation, CA foundation doesn't have redemption of preferences chapter. CA foundation, na, redemption of preferences chapter. Forget about it. Do you understand untraceable? Untraceable means could not be traced. Could not be traced. Direct entry, then also BCom also that there might be a chapter redemption of preference. Anyway, forget about it. Forget about that. Do you understand? Something is untraceable means what? Untraceable means it is difficult to find. It is difficult to trace. Means say for example, Inside Commerce Studies has hired few people. They have maintained the provident fund for them. They have maintained the provident fund for them. But they have not registered that provident fund with the income tax department. Now the question is, how do the income tax department come to know? Saying that there is a institution called as Inside Commerce Studies. They have maintained the provident fund, but they have not registered with the income tax department. How the officer would come to know? He cannot come to know about this. He will come to know about this when any of the employee would retire and that employee would receive huge sum of money in his bank account as a lump sum amount from the fund at the time of retirement. At that point of time, income tax officer will ask that employee, this lump sum amount, huge amount which you have received in your bank account, this is what? This is received from whom? For what it is received? He will say, sir, this is provident fund balance. I retired now, so my employer has given me provident fund. So at that point of time when employee retires, income tax officer will ask a question to him. You have retired, you have withdrawn money from the provident fund, everything is okay. But whether that provident fund is registered or not registered, at that point of time employee will go to employer and he will ask registration number of provident fund. And if the fund is not registered now, at that point of time tax will be levied. When employee is retired and he has withdrawn money from the fund. Why tax will be levied when employee is retired and amount is withdrawn from the fund? Because at that point of time fund has become traceable. At that point of time fund has become traceable. So we say that since this is an unrecognized provident fund, definitely employers contribution to the provident fund, we have an intention to levy the tax. Interest credited to the fund, we have an intention to levy the tax. We have an intention of levying the tax, but can we levy the tax? No, because fund is not traceable right now. Because fund is not traceable right now. When fund will become traceable? Fund will become traceable when employee retires. At that point of time, we will definitely levy the tax. So the last point says lump sum payment is received at the time of retirement. Lump sum payment is received at the time of retirement. At that point of time, fund will become traceable. At that point of time, fund will become traceable. So when fund becomes traceable at the time of retirement, tax will be levied. Now say for example, Manoj was working with a very small organization and that organization had hired less than 20 persons. Then it is not mandatory for them to maintain the provident fund. Still they have maintained the provident fund, but they have not registered that provident fund with the income tax department. That fund will be called as unrecognized provident fund. Now Manoj is retired. At the time of retirement, he has withdrawn money from the provident fund. So it is lump sum amount received from unrecognized provident fund on retirement. For example, 20 lakh rupees is received. Then this 20 lakhs will be divided in 4 parts. For levying the tax, this 20 lakhs will be divided in 4 parts. First of all, you tell me, this 20 lakh includes whose contribution? What is this 20 lakhs? The amount lying in the fund. Which fund? Unrecognized provident fund. At the time of retirement, that amount is withdrawn by the employee. So this fund would include which constituents? It would include which components? Who might have contributed to this fund? Definitely employee might have contributed. So that fund balance of 20 lakhs would include number 1, employee's contribution. It will also include employer's contribution. Yes or no? On those contributions, interest might have been earned, na? So interest on employee's contribution. And the last one is what? Interest on employer's contribution. So this 20 lakhs is required to be bifurcated into these 4 parts. Now say for example, question says that out of 20 lakhs, 12 lakhs is contribution and 8 lakhs is interest. Question is going to give you this breakup. Question says that out of 20 lakhs, 12 lakhs is contribution and 8 lakhs is interest. And it further says that employer-employee both had contributed the equal amount. Question says out of 20 lakhs, 12 lakhs is contribution and 8 lakhs is interest. So left hand side contribution, first 2 points. Right hand side interest, next 2 points. So contribution is 12 lakhs, interest is 8 lakhs. Now they say that employer-employee both have contributed equal amount. So 12 lakhs contribution should be divided in 2 parts. Employee contribution how much? 6 lakhs. Employer contribution also 6 lakhs. Interest, which is 12 lakhs, should also be bifurcated equally in that case. 4 lakhs each. So amount withdrawn by the employee from the unrecognized provident fund at the time of retirement will be taxed. For the purpose of taxing it, it needs to be bifurcated into 4 parts. Part 1 employee's contribution, part 2 employer's contribution, part 3 interest on employee's contribution, and part 4 interest on employer's contribution. This employee's contribution first part. Employee's contribution part 1. This we say that this is not taxable. Why it is not taxable? Because it is already taxed. Oh, is it already taxed? When? How? If you recollect the concept of gross basic salary versus net basic salary, I told you that employee's contribution will be deducted from his salary, But while calculating his income, you would take up which amount in his income? Will you take up the net basic salary amount or you will take up the gross basic salary amount? So definitely what is the answer? You will be taking up the gross basic salary amount, correct? So you have levied tax on this 50,000 and he has contributed how much to provident fund? Say 4,000 every month he has contributed. So if you levy tax on 50, this 4 is also part of 50. So if 50 is taxed, definitely 4,000 which is part of 50 is already taxed. Every month he has contributed 4,000. So every year he might have contributed say 48,000. That 48,000 contributed over a period of time has got accumulated, and now as of now the amount is 6 lakhs. So this 6 lakhs cannot be taxed. Why it cannot be taxed? Because it is already taxed in the past. If we levy the tax once again, that would amount to what? That would amount to double taxation. That would amount to double taxation. So to avoid the situation of double taxation, we are saying that this will not be taxed. Employer's contribution. Will this be taxed? Yes. Where? Under the head income from salary. Interest on employee's contribution. Will this be taxed? Yes. Where? Income from other sources. Interest on employees, interest on employer's contribution. Will this be taxed? Yes. Where? Income from salaries. So employer's contribution and interest on employer's contribution. Employer's contribution and interest on employer contribution. This will be taxed under income from salaries. Whereas interest on employee's contribution will be taxed under income from other sources. Is that very, very clear? Yes or no? So this is the treatment of lump sum amount withdrawn from the provident fund. Which provident fund? Unrecognized provident fund at the time of retirement. Yes. Now let me add one more point here. Our discussion with respect to unrecognized provident fund has come to an end. But let me add one more point here. Say for example, I am doing business. I have hired 10 persons. Is it mandatory for me to maintain provident fund for their benefit? Answer is no. It is not mandatory. It is mandatory if I hire 20 or more persons. But I have hired only 10 or more persons. So it is not mandatory for me to maintain the provident fund for the benefit of my employees. But still I have maintained the provident fund. And since I have maintained the provident fund now, my employees are happy, but I have not registered my provident fund with the income tax department. So my fund is unrecognized provident fund. Now slowly my business has progressed. Now I have hired few more employees. Now the number of employees have reached 25. Now is it mandatory for me to maintain provident fund? Yes. But I am already maintaining. But now my employees are pressurizing me, sir, register the provident fund. Otherwise, when we retire, if we receive money from the fund, that will become taxable to us. Please register the provident fund. So I went to the income tax department. I applied for registration and they granted me registration. But already fund is in existence. Fund was in existence. It was not registered. So fund was a unrecognized provident fund. Thereafter, I applied for registration. Registration is granted, so my fund is recognized. So what has happened? My unrecognized provident fund is converted into a recognized provident fund. My unrecognized provident fund is converted into a recognized provident fund. Have you understood this? So the question is, what would be the treatment when my unrecognized provident fund gets converted into recognized provident fund? What would be the treatment when my unrecognized provident fund gets converted into a, what would be the treatment? Dikshit, listen to me carefully. I was having a business. I had hired less than 20 people. So for me it is not mandatory to maintain the provident fund. Still I have maintained the provident fund, but I have not registered the provident fund. So this is which fund? Unrecognized provident fund. Now I have hired additional employees. Now my number of employees are more than 20. So I have to maintain provident fund. Have I maintained? I already have a provident fund. But now my employees are pressurizing me to register the provident fund. So I went to the income tax department office, I applied for registration and they have granted me the registration. So what has happened? My unregistered provident fund, unrecognized provident fund is registered and it has become recognized provident fund. Dikshit, have you understood? Okay. Now my question is, when your unrecognized provident fund gets converted into recognized provident fund, so in future treatment will be given as if the fund is recognized. But right now the fund, unrecognized provident fund got converted into recognized now. So what is the treatment which is required to be given on this conversion of unrecognized into recognized? So government says when your unrecognized provident fund gets converted into recognized provident fund now, in that year, in the year of conversion, give the same treatment which you are giving, give the same treatment which you are giving when the fund is withdrawn from unrecognized provident fund. When the employee retires and the fund is unrecognized, what treatment do you give? The lump sum amount is broken down into 4 parts: employee contribution, employer contribution, interest on employee contribution, interest on employer contribution. Now we break that amount withdrawn into 4 parts and we levy the tax. Similar treatment should be given when you recognize when the fund is getting registered. When the fund is getting converted from unrecognized provident fund to recognized provident fund, same treatment should be given. Whatever balance is lying in the unrecognized provident fund should be broken down into 4 parts: employee contribution, employer contribution, interest on employee contribution, and last one is interest on employer's contribution. Employee contribution should not be taxed. Employer contribution and interest on employer contribution, that portion should be taxed under income from salaries, whereas interest on employees contribution should be taxed under income from other sources. The same treatment will be given in the year in which unrecognized provident fund gets converted into recognized provident fund. Have you understood this? Yes or no? See, it is as good as you have done some bad deeds. If you have done some bad deeds, you will have to bear the brunt of God. No? You have to bear the cost. You will have to bear the consequences of the bad deeds. Say for example, you have murdered someone. Now you have to face the consequences. Whatever bad deeds you have done, you will get negative fruits of those bad deeds in your life. But say for example, you have murdered someone. Now you go to temple and you, in front of God, you bow down and you say, sorry, by mistake I murdered someone. This is not acceptable. So what God will do? You promise God that from today onwards I will not do any bad deed. Please forgive me. So God says, till now whatever you have done, till now whatever bad deeds you have done, you pay cost for that. Today onwards don't perform any bad deed. Similarly, till now this fund was unrecognized. Now it is becoming recognized. So what should we do? We give the treatment as if it was unrecognized. So when the fund is getting converted from unrecognized to recognized, the year in which the fund is getting converted from unrecognized to recognized, the treatment will be given as if the fund is unrecognized. The amount will be bifurcated into 4 parts. Tax will be levied. And from today onward, this fund will be recognized. In future, treatment will be given as if the fund is recognized, because fund is already recognized. Amount before registration alone will be treated as unrecognized PF, and after registration that portion will be treated as recognized. Am I right? Yes. Amount before registration, whatever is the amount lying in the fund at the time of registration, When you go for registration with the income tax department, whatever is the fund lying now, whatever the balance of the fund lying in the account, that balance will be broken down into 4 parts. Tax will be levied as per this treatment. Thereafter, the fund will become the recognized provident fund, and when you retire and when you withdraw money from the fund, that will be recognized. So you'll enjoy the exemption provided 5 years of continuous service condition is fulfilled. Yes, have you all understood very clearly? Yes or no? So, this unrecognized portion discussion is over. Now, let's move on to the fourth type of provident fund. See, these 3 types of provident fund are statutory provident fund, recognized provident fund, unrecognized provident fund. These 3 types of provident fund are for the benefit of those people who are doing job. They are for the benefit of those people who are doing job. But don't you feel those people who are self-employed, they also have a retirement life? Or should they work till they die? They should also have some retirement life, na? So, this point came in the mind of government only in the year 1968, saying that those people who are self-employed should also have a retirement life. That point came to the mind of the government only in the year 1968. So in the year 1968, government came out with Public Provident Fund Act 1968. So government in the year 1968 came out with Public Provident Fund Act 1968. So all those people who are self-employed can participate in this Public Provident Fund. Actually, Public Provident Fund is for the benefit of public at large. But the thought process behind introducing such kind of Public Provident Fund is for those people who are self-employed, they do not have any retirement fund. So, government to cater to those people came out with the concept of Public Provident Fund. But this is not open. This is not only for those who are self-employed. When government came out, the fund was offered. This concept was offered to everyone. So this Public Provident Fund is not only for those who are self-employed, but now it is open for general public. So, before the break, someone had asked me, sir, can I have multiple provident fund accounts? Can you have more than one provident fund account? So, I'm answering that question right now. Yes, you can have more than one provident fund account. One can be statutory provident fund account, other one can be public provident fund account. One can be recognized provident fund account, the other one can be public provident fund account. One can be unrecognized provident fund account, other one can be public provident fund account. But the question is, can you have 2 SPF account, 2 statutory provident fund account? Can you have 2 RPF account? Can you have 2 URPF account? No, you can't have. There can be only one SPF account, only one RPF account, only one URPF account, only one PPF account. But you can have in combination SPF with PPF, RPF with PPF, URPF with PPF. Are you understanding? Yes. So if you are doing job, if you are a government employee, you are doing job, you will be having SPF account. If you are private sector employee, you are doing job, your employer has registered the fund, you will be having a RPF account. If the fund is not registered with the income tax department, you will be having a URPF account. But simultaneously, you can also have a public provident fund account. Public provident fund account is a fund created by the government of India for the benefit of general public at large. In that, who will contribute? Who is the employer? There is no employer. There is no employer. Only you will have to contribute for your better future. Oh, there is no employer, only I will have to contribute. Yes. Then what is the advantage? Why should I contribute? I will go and keep money in my bank account. No, if you contribute here, you are going to get the interest. So what? Even if I keep money in my bank account, that interest also I will get now. But here the interest is exempted from tax. Here when you invest money, you will get deduction also. So in public provident fund, there is no employer, but government is offering you the benefit of deduction and exemption. Are you understanding? Yes or no? Okay. Listen to me carefully. Now we move on to the fourth type of provident fund called as public provident fund. Employee contribution to this public provident fund or individual's contribution. In fact, there is no employee, individual's contribution to public provident fund. Is it eligible for exemption? Yes. Under section 80C, it is eligible for exemption. Employer contribution, there is no employer here, so employer do not contribute. Interest credited to this fund is exempt from tax. Amount withdrawn from this public provident fund, this is also exempt from tax under section 10 clause 11. So what is the advantage of investing money in public provident fund? Interest earned is totally exempt from tax. Amount withdrawn from the fund is also totally exempt from tax. This is the advantage. Is that very, very clear? Yes or no? Say yes or no? Yes. Okay, let's proceed. I now move on to the last type of fund called as approved superannuation fund. Called as approved superannuation fund. Now listen to me very carefully. See, maintaining provident fund is mandatory. See, government, for the benefit of government and semi-government employee, definitely there is a provident fund. But for private sector employees, maintaining provident fund is mandatory if you are hiring 20 or more persons. Maintaining provident fund is mandatory if you are hiring 20 or more persons. Correct? So definitely every employer hiring 20 or more persons would maintain the provident fund. But my question to you is, say for example, let's talk about Infosys. In Infosys, there are, I am talking about the Infosys of olden days, not as of now. For example, Infosys was built by the team of professionals, including Narayan Murthy. Now, say for example, Manoj is also working with Infosys. Manoj is working at a very lower designation. He is not part of board of directors team. He is not working at a higher designation. Now, point is, Infosys will definitely maintain provident fund for all the employees, including the full-time directors. But the question is, don't you feel that those people who are working at a higher designation, they are driving force for the company? For them, company should give some extra benefit. Yes, company should give. If company also feels so, that yes, for those employees who are working at a higher designation, they are driving the company, because of them business is there. If company feels so that these people are very important to us, let us create one more retirement fund for them. Then company is free to do so. Maintaining provident fund is mandatory. But besides maintaining provident fund, if company feels that no, for our employees we want to create one more fund. And when our employees retire they should have huge amount of money. So they will have a good retirement life. So if company wants, company can create some extra fund also over and above the provident fund. If company creates some other fund other than the provident fund, company creates some other retirement fund for the benefit of employee voluntarily, then that fund is called as superannuation fund. Superannuation fund is nothing but retirement fund. When you achieve the age of 60 years, then you retire. We say that you are retiring by superannuation. So if company has created extra fund for the benefit of employee over and above the provident fund, that fund will be called as superannuation fund. You registered this with income tax department, that fund will be called as approved superannuation fund. You register this with income tax department. This fund will be named as approved superannuation fund. Have you understood what is this superannuation fund? Yes or no? Now, is it mandatory for every employer to maintain approved superannuation fund? No, it is optional. If the employer feels that no, we should maintain extra fund for the benefit of our employees, they may maintain. For them, we are saying that you get this fund registered with the income tax department. This fund will be then called as approved superannuation fund, and then we will give certain exemptions and deductions to this fund. If you don't register, no benefit of exemption and deduction will be given. So, this is the superannuation fund which has been approved by the commissioner in accordance with rules contained in Part B of the 4th schedule of the Income Tax Act. The functioning of the provident fund and the superannuation fund is same, meaning thereby in superannuation fund also employer will contribute, employee will contribute, the balance in the fund will be invested somewhere, some amount of interest will be earned on that. At the time of retirement, the entire balance of the superannuation fund will also be given to employee. So there are same 4 components here also. So we need to discuss the tax treatment of same 4 components. First one is employee's contribution to approved superannuation fund. Can he claim deduction? Yes, deduction is allowed. Where? Section 80C. Section 80C. Next, point number 2 is employer's contribution to provident fund. Employer's contribution to provident fund is an income of employee. So the question arises, is that taxable? So government says it is exempt up to 7,50,000 per annum. It is exempt up to 7,50,000 per annum. If the employer contribution is more than 7,50,000, then it is taxable. If the employer contribution is more than 7,50,000, then it is taxable. Last year this amount was not 7,50,000, it was 1,50,000. Those students who appeared for the November 20 examination, for them this amount was not 7,50,000, it was 1,50,000. Now in budget 2020, they have increased it to 7,50,000. So employer contribution up to 7,50,000 is not taxable. Over and above 7,50,000 will become taxable. Are you understanding? The way in case of recognized provident fund we are saying na, employer's contribution to recognized provident fund is exempt to the extent of 12% of salary, excess is taxable. Similarly here, employer's contribution to approved superannuation fund up to 7,50,000 per annum is exempt from tax, excess is taxable. Is that very, very clear? Interest credited to this approved superannuation fund is exempt from tax, and amount withdrawn. Interest credited to this approved superannuation fund is exempt from tax, and amount withdrawn from this approved superannuation fund at the time of retirement is also exempt from tax. Yes, is that very, very clear? This note 3 is also over. This note 3 is related to unrecognized provident fund. With this, our discussion of this retirement fund comes to an end. But this amendment I want to discuss with you in detail. Last year, instead of 7,50,000, how much was exempt? 1,50,000 was exempt. This 1,50,000 is increased to 7,50,000. This amendment I want to discuss with you in detail. There is a controversy here, and that controversy is not addressed by the government also, and it is not addressed even by the CA Institute. So now there is a dilemma as to what would be the treatment or what would be the taxability. Let's try to understand. This amendment, 1,50,000 is increased to 7,50,000. For that, government has changed section 17 subsection 2 clause 7. So I want to move on to section 17 subsection 2 clause 7. I will move on to section 17 subsection 2 clause 7. Actually it is part of perquisite's discussion. It is part of discussion of perquisite. but I want to cover up right now. What is approved superannuation fund in simple words? Approved superannuation fund is an extra fund created by the employer voluntarily for the benefit of employee. Approved superannuation fund is an extra fund created by employer for the benefit of employee voluntarily. Is that very clear? Rizwan? Now read this provision. I will discuss with you two things. I will discuss with you two things. Number one, amendment in section 17 subsection 2 clause 7. I will discuss two things with you. Number one, amendment in section 17 subsection 2 clause 7, and number two, newly inserted clause section 17 subsection 2 clause 7a. So two things I need to discuss here. Section 17 subsection 2 clause 7, what is the amendment? And section 17 subsection 2 clause 7a, newly inserted clause. Now listen to me carefully what it is. Section 17 subsection 2 clause 7, let us first of all read what it says. It says aggregate amount of contribution. Listen to me. It says what? Aggregate amount of contribution exceeding 750 by the employer to the account of employee under approved superannuation fund, recognized provident fund and national pension scheme referred to in section 80 CCD. Instead of approved superannuation fund, now they have come up with two extra funds. Up to last year what was the provision? Employer's contribution to approved superannuation fund is exempt up to 1,50,000. Excess is taxable. That was the provision up to last year. But now here, two changes are made. Number one, the amount is increased from 1,50,000 to 7,50,000. That is the first change. And number two, along with the employer's contribution to approved superannuation fund, now they have also taken up employer's contribution to recognized provident fund. They have also taken up employer's contribution to pension scheme. So now they are not talking only about one employer's contribution, they are talking about three employers' contribution in aggregate. I will take the numerical example to make you understand. First of all, tell me, have you understood what is the amendment? The amount of 1,50,000 is increased to 7,50,000. This is first amendment. Second amendment, up to last year, what was happening? What was covered? Only employers' contribution to approved superannuation fund was covered. Now, it is not only approved superannuation fund, it is also employers' contribution to recognized provident fund, it is also employers' contribution to pension scheme referred to in section 80 CCD. Now, let me give you an example here. See, I have the example here. Example number 9. For understanding section 17 to clause 7 and 17 to clause 7a. Let me tell you, give an example. Number is what? Employer's contribution to recognized provident fund is 3 lakhs. For example, employer's contribution to recognize the provident fund is 3 lakh rupees. Employer's contribution to approved superannuation fund is also 3 lakh rupees. Employer's contribution to national pension scheme is also 3 lakh rupees. So what is the aggregate employer's contribution? 9 lakhs. Out of 9 lakhs, how much is not taxable? Out of 9 lakhs, how much is not taxable? 7,50,000 is not taxable. 7,50,000 is not taxable. So the question is, how much is taxable? 1,50,000 is taxable. 1,50,000 is taxable. Have you understood this? Yes or no? Oi, please respond. So this is example for making you understand the amendment. This was 17 to clause 7. This for 17 to clause 7. Now along with that, 17 to clause 7a, this is newly inserted. This is also connected to 17 to clause 7. What it says? Let us read. Annual accretion. Annual accretion means increase in the amount. Accretion means increase in the amount. Annual accretion by way of interest, dividend or any other sum. Annual accretion in the form of interest, dividend or any other amount during the previous year to the balance at the credit of the fund or the scheme referred to in 17 to clause 7. To the extent it relates to employer's taxable contribution will also become taxable. Have you understood something? I don't think so. It says what na? Let me give an example to make you understand. See, example 9 which I gave you na, for 17 to clause 7, same I am giving for 17 to clause 7. Accretion means increase. Increase. For example, you had 500 rupees in your pocket. You went and kept that 500 rupees as FD in the bank. So now you have got an interest of say 30 rupees. So 30 rupees is accretion. 30 rupees is what? Is nothing but accretion. Now listen to me very carefully. Now you tell me, first of all you tell me, what is the aggregate contribution of employer to recognized provident fund, approved superannuation fund, national pension scheme? In this example, 9 lakhs. Out of 9 lakhs, how much is not taxable? As per section 17 subsection 2 clause 7, 7 lakh 50 is not taxable. Anything beyond 7 lakh 50 is taxable. So in our example, how much is taxable? 1 lakh 50 is taxable. 1 lakh 50 is taxable. Now, for example, this 9 lakh aggregate contribution is invested somewhere. This 9 lakh aggregate contribution is invested somewhere. On this 9 lakh, 90,000 interest is earned. See, this 9 lakh is not total fund balance. This is only employer's contribution. Are you understanding? Please don't get confused. This is only employer's contribution. 9 lakhs. Out of that, 750 is not taxable, 150 is taxable. Now this 9 lakh will be invested somewhere now. When you deposit this money in the fund, this will get invested somewhere. On that investment, you will earn some income. So there is a interest on employer's contribution to RPF, approved superannuation fund, NPF, etc. On that 9 lakhs, you have earned 90,000 as interest. On that 9 lakhs, you have earned 90,000 as interest. Now my question is, out of 9 lakh, 750 is not taxable, 150 is taxable. So government in section 17 to clause 7a says, whatever is the taxable portion of the employer's contribution, interest earned on that will also become taxable on proportionate basis. Whatever is the taxable portion of employer's contribution, employer's contribution is 9 lakh. Of that, taxable portion is 1 lakh 50. Now, interest on a proportionate basis will become taxable. So, how much interest should become taxable? Out of 9 lakh of contribution, 1 lakh 50,000 contribution is being taxed. And if on that 9 lakh, 90,000 interest is earned, how much proportionate interest should be taxed? Simple cross multiplication you have to do. Simple cross multiplication you have to do. So what was the employer's contribution? 9 lakhs. Out of that, on how much amount tax is levied? 1 lakh 50. How much amount of interest is earned on 9 lakhs? 90,000. So how much should be taxed out of that 90? Do cross multiplication. How much should be taxed? Are you understanding? 15,000 should be taxed. So, what is the total contribution of employer to all the three funds? 9 lakhs. Out of 9 lakhs, 750 is not taxed. What is taxed is 150. This 9 lakh will be invested. On that 9 lakh, what is the amount of interest which is on 90,000? So, from 9 lakh contribution, 1 lakh 50 is taxable. So, from 90,000 interest, how much should be taxed? 15,000 should be taxed. In other words, how much should not be taxed? 75,000 should not be taxed. 75,000 should not be taxed, 15,000 should be taxed. That 15,000 will be taxed as per which section? As per 17 to clause 7a, which is newly inserted. As per 17 to clause 7a, this 15,000 will become taxable. And as per 17 to clause 7, this 1,50,000 will become taxable. Have you all understood this very, very clearly? Those who have appeared the examination for November might have studied the old provision. Have you now understood the new provision? Shruti is asking me, sir, are the sections for the taxable portion or exempt portion? This section 17 to clause 7 and 17 to clause 7a, they are for the taxable portion or they are for the exempt portion? So the answer is they are for the taxable portion. Actually, they are not using the word exemption in the provision. They are saying that amount in excess of 7,50,000 will be considered as taxable amount. There is no separate section for exemption. Only when the amount exceeds 750, that will be considered as income and that will be considered as taxable. I did not wanted to get into that thing, but since you have asked me the question right now, I am answering that sections are only for taxable amount. Because that amount is considered as income only when it is exceeding a particular limit. So beyond 750 we have a section. Beyond, we are having a section only for taxable portion, not for the exempt portion. Okay, now have you understood this? If yes, then I can get into that controversial part. Sarvana is asking me, sir, only employer's contribution interest? Yes, I am right now talking only about the interest on employer's contribution. Mr. Sarvana, that provident fund, when we were discussing this provident fund, etc., here the interest which we spoke about, this is not interest only on employer's contribution. This interest is on employer-employee both contribution, total contribution. This interest is on total contribution, employer as well as employee, both contribution. But right now, which I am trying to explain you, 17 to clause 7a, that is only interest on employer's contribution. Yes? Okay. Now shall I proceed to discuss the controversial issue? Are you all ready for that? You have to apply your mind. Don't say that after 1 o'clock it is difficult. Now listen to me carefully. 17 to clause 7, which is amended. Earlier it said that employer's contribution to approved superannuation fund next to the 1,50,000 is taxable. Now it says that employer's contribution to approved superannuation fund plus recognized provident fund plus national pension scheme combined in aggregate in excess of 7,50,000 is taxable. So as per section 17 to clause 7, we levied a tax on 150. And whatever is the taxable portion of that, proportionate interest will also become taxable. Out of interest of 90, we levied a tax on 15,000. This is as per section 17 subsection 2 clause 7a, which is newly inserted. Now my point is what? My point is, here in this recognized provident fund table, in recognized provident fund table also, I had explained you employer's contribution, na? One second. Here employer's contribution, refer to this part, this part, this part. I am talking about this part. Employer contribution to recognized provident fund. Employer contribution to recognized provident fund is exempt up to 12% of salary. Salary equals to basic salary, DA recognized turnover commission. Yes or no? Employer's contribution to recognize the provident fund in excess of 12% of salary will become taxable. So, if you now apply both the provisions in a combined manner, what is going to happen? Listen to me. Example, listen to me very carefully. Don't get deviated. Here, this 9 lakh includes employer's contribution to recognize provident fund, yes or no? This employer contribution of 3 lakh to recognize the provident fund, what the provision relating to recognized provident fund says? Out of these 3 lakhs, there is exemption up to 12% of salary. Salary equals to basic salary, DA recognized turnover commission. Now let me tell you that basic salary plus DA recognized plus turnover commission is giving you an amount of 20 lakhs. So you apply 12% on that 20 lakhs and you are getting an amount of 2 lakh 60. So 2 lakh 60 is exempt, not taxable. Excess 60 will become taxable. Yes or no? This is the only meaning na for this. For this part, that is the only meaning na. Out of 3 lakhs, 240 is exempt, 60 is taxable. Yes? Now what is the controversy? The controversy is, here if you refer to the provision of RPF, you are charging tax on 60. Here on an aggregate basis, you are charging tax on 150. But this 3 lakhs is part of this 9 lakh na. This 3 lakhs is part of 9 lakhs, don't you feel so? This 3 lakhs is part of 9 lakhs, don't you feel so? If this 3 lakh is part of 9 lakhs, out of that 3 lakhs, if 60,000 is already taxed, don't you feel in this 1 lakh 50 also taxable amount, there might be some portion of 60? Means to that extent there is double taxation. This is the controversy. This government of India has not bothered to clarify. CA Institute has not bothered to clarify. Everyone is mum. Everyone is on a silent mode. Now, shockingly, if the examiner puts a question on this, what will be the situation? No one knows. No one knows. This has become a talk of the town. When the amendment came in budget 20, this had become a talk of the town. Still there is no clarity on this. Everyone is confused as to what will happen. So this confusion prevails. To this there is no answer. If someone is giving answer, then he is giving his own opinion. Similarly, I also have my own opinion. If someone is asking me what would be the treatment in this case, then as an individual, I would definitely not like to pay double taxation. So what I would say na, I will say that this entire 60,000 is part of this 150. This entire 60 is part of 150. And this 60 is already taxed na. So you should not levy tax on 150. From that 150 you should deduct 60,000. And you should levy tax only on 90. From that 150 you should deduct 60 because 60 is already taxed. And you should levy tax only on 150 minus 60, that is 90. That is my opinion. That is my opinion, and I believe that this is logical opinion. What others are saying, I do not know. ICI is silent, government is silent. This is my opinion. 150 should not be taxed. 150 minus 60 should be taxed. This is my opinion. If your favorite subject is mathematics, na? If your favorite subject is mathematics, then you will say that, sir, this 9 lakh is consisting of 3 lakhs, na? So the taxable amount of 1 lakh 50 should also be bifurcated in 3 parts, na? 50, 50, 50. How can you say that this 60 is entirely included in 150? Because this 150 also, if you bifurcate in 3 parts, are you understanding what is controversy? This 150 also, if you bifurcate in 3 parts, it will be 50, 50, 50. So taxable component of RPF is only 50. How can you say that 60 is part of that 50? But who told you that you have to apply the mathematics here? Who told you that you have to apply mathematics here? If your favorite subject is maths, then it doesn't mean that you have to apply ratio and proportion everywhere. If law is silent, law doesn't clarify anything, then definitely I would like to interpret the provision the way they are beneficial to me. It was the job of the government to clarify this thing. If not at all, it was the job of ICI to clarify. If the ICI is asking question on this in the examination, they are doing the blunder. That should not happen. But in my opinion, 150 minus 60, 90 is taxable because that is the opinion in which my tax liability will be less. If law is silent, it should be interpreted in the manner it is beneficial to the taxpayer. So there is a controversy on this contribution also. Similarly, there is a controversy on interest also. See, if this 3 lakh is part of 9 lakh contribution, there would be interest also, na? Interest on RPF, which is not taxable up to 9.5% per annum. That interest will also form part of this 15,000. Na? So one more controversy. So there is a controversy on contribution also, there is a controversy on interest also. I do not know what to do about that, but have you understood what is the controversy? Yes? Shall I proceed? Okay. Now don't ask me what should we answer in the examination. In my opinion, CA Institute should not ask the question on this point because they have not bothered to clarify. If at all they ask, then whatever I said you, that is my opinion. Now before we actually move on to a practical question, I want to ask you a very simple question. in this recognized provident fund, we said na, employer's contribution up to 12% is not taxable, excess is taxable. Interest credited to the fund up to 9.5% per annum is not taxable, excess is taxable. All these things I explained you and you readily accepted. Yes, yes, correct, correct. But if I ask you a question, salary, income from salary is taxable on which basis? The answer is income from salary is taxable either on due basis or on receipt basis, whichever is earlier. So the question arises, this provident fund balance, is that due to you in the current year? Is that received by you in the current year? When it will become due? When it will be received? Only when you retire. Only when you retire all this amount will become due to you, na? Only when you retire, this amount will be received by you. So these amounts, they are neither due right now, nor they are received right now. A doubt should have come to your mind saying that these amounts are neither due nor they are received. How can you levy the tax? Because section 15 says that taxable on due basis or receipt basis, whichever is earlier. So these amounts are neither due nor received. Sarvanna, accrued word is not used in the Income Tax Act in the chapter of income from salary. The word accrued and due are different. Accrued word is not appearing anywhere in this chapter. Salary is taxable either on due basis or on receipt basis. Accrual has no importance. Accrual word has no role to play. So the question is, these amounts are neither due nor received, so tax cannot be levied. How you are levying the tax? On what basis? There is no charging section. This was the question asked by the people to the government. So government says, no, do you believe this is not received? Oh, correct, correct, correct. So let us come out with one more section. And government came out with section 7. Government came out with which section? Section 7. In section 7, government says, following amounts are deemed to be received. You are believing that these amounts are neither due nor received. So government says, these are deemed to be received. Point number 1 says, employer's contribution to recognized provident fund in excess of 12% of salary is deemed to be received. Interest credited to recognized provident fund balance at the credit of the SSC in excess of 9.5% is deemed to be received. When your unrecognized provident fund gets converted into recognized provident fund, you bifurcate that unrecognized provident fund amount in 4 parts, na? And you levy tax. But that amount is neither due nor received. Government says deemed to be received. Taxable transfer balance from unrecognized to recognized provident fund. These are deemed to be received. So for charging tax, now government intentionally came out with section 7 saying that following amounts are deemed to be received. Have you understood this? Similarly, point number 4, employer's contribution to pension fund. This amount you are going to receive after you retire, but tax is levied right now. So government says contribution made by employer to the account of an employee under pension scheme referred to in section 80 CCD is deemed to be received. Everything is deemed to be received. So now you cannot say neither this is due nor it is received. Government says that it is deemed to be received. Means it is received. So for the purpose of Income Tax Act, this is deemed to be received, so tax will be levied. Is that very, very clear? Now I have 2 questions in front of you. First of all, you take this question as homework. Question number 3, na? Question number 3, take this as homework. Seriously try this at home. Try to solve this. If everyone is getting the right answer, na, then I will not have discussion on this. Why to waste time if you are getting the right answer? If each one of you are having getting the right answer, I will not discuss this in class. If someone, even one student has got the wrong answer, or even one student is having any doubt, then we will definitely discuss. But please try, because I am having very less time. I want to focus on other chapters, other concept, important things. These are very simple questions. So you can try this at home. If you are not getting the answer, definitely I will discuss in the class. So question 3 is today's homework. You can write somewhere in your notebook saying that this is homework. Question number 2, second question of this chapter. Read it very carefully. Next, URPF at retirement only taxable. Yes, RPF is also taxable. Na? 5 years of continuous service condition is not fulfilled then. Mr. Sarvanna, if RPF, you withdraw money from RPF, 5 years of continuous service condition is not fulfilled, RPF will also become taxable. How can you forget that? Let us proceed. Question number 2. Only discussion. Listen to me carefully. I will ask you a question, you should respond me. Mr. Akshay Khanna retires from his employment on 30th June 20. He submits the following information. Basic salary 20,000 per month. Now tell me, if I ask you to compute his income from salary for 2021, you will take basic salary for how many months? Yes? If I ask you to calculate his income from salary for the previous year 2021, you will take basic salary 20,000 per month for how many months? Oh my God. Mr. Arun, what is your previous year? You are following calendar year system? Which system you are following? Arun and Vishnu, they are saying 9 months. 30th June, if you retire, you will receive salary only for 3 months, yaar. Vishnu, Mr. Vishnu, you are God. Your parents have kept your name as Vishnu, you are God, you should know everything. How can you give the wrong answer? If God himself gives the wrong answer, what about others? So you will be taking salary only for 3 months. Basic salary 3 months. Dearness allowance 6,000 per month, of which 1/3 is recognized. Dearness allowance is also fully taxable category. 1/3 is recognized means out of 6,000, 2,000 is recognized. 4,000 is ordinary. Out of 6,000, 2,000 is recognized, 4,000 is ordinary. Point C. Point C says his employer makes a contribution of 3,000 per month to his provident fund, to which Mr. Akshay Khanna also makes a similar contribution. What do you mean by similar? What do you mean by similar? Similar means same amount. Can you tell me what is the quantum of employer's contribution? What is the quantum of employer's contribution? Oi, tell me for the year, yaar. Just don't pick up the amount from the question. Tell me for the year. You are not calculating income for 1 month, yaar. What is the amount of employer's contribution? Is it 9,000 or 36,000? 9,000. Don't take 36,000. Akshaya, he has retired on 30th June. After retirement, employer is not going to contribute. 9,000 you have to take. So employer's contribution is 9,000. What is the amount of employee's contribution? Similar amount, similar contribution, same amount of 9,000. Correct? So amount of employer contribution is 9,000, amount of employee contribution is also 9,000. Further it says, interest credited to the fund on 30th June is at the rate of 10% and the amount is 4,000. This is interest credited to the fund. This is the third point. Fourth point says, on his retirement, he has received 7,60,000 from this provident fund. On his retirement, he has received 7,60,000 from his provident fund, being accumulated balance therein. So what is 7,60,000? Accumulated balance withdrawn from the fund at the time of retirement. This 7,60,000, they have given you the breakup in 4 amounts. This includes the employer contribution of 330, interest on employer contribution 44, employees contribution 340, interest on employees contribution 46. Why the breakup is given? If this is unrecognized provident fund, then you know that the amount withdrawn from the unrecognized provident fund at the time of retirement is required to be broken down into 4 parts, and accordingly tax treatment is required to be given. That is the reason they have given you the amounts. Yes or no? You are required to determine the taxable PF contribution and interest, if any, for the previous year 2021. Also advise him about the taxability or otherwise of the lump sum amount received from the fund at the time of retirement in each of the following cases. In each of the following cases. So they are asking you to give the answer in 3 different cases. Case A, if the fund is statutory provident fund. Case B, if the fund is recognized provident fund. Case C, if the fund is unrecognized provident fund. So you are supposed to give the answer. See, they are not asking you to calculate the amount of income from salary. They are just asking you to discuss the tax treatment of provident fund. So you have to discuss tax treatment of 4 different components of fund. What is that? Employees contribution, employers contribution, interest credited to the fund, amount withdrawn from the fund at the time of retirement. For these 4 different components, you have to discuss the tax treatment in 3 different cases. Case A, if the fund is SPF, case B, if the fund is RPF, and case C, if the fund is URPF. I am going to discuss this. Solution is given here, but listen to me carefully. Answer all my questions. Let us go case by case. First, case A, if the fund is statutory provident fund. What is the amount of employees contribution? 9,000. What would be the treatment of this 9,000? Employees contribution to statutory provident fund. What is the treatment? Deduction will be allowed under section 80C. Deduction will be allowed under section 80C. Yes or no? Dikshit, I am not talking about employer's contribution. I am talking about employee's contribution. For employee's contribution, there is no exemption. It is deduction under section 80C. So employees contribution to statutory provident fund, you can claim deduction under section 80C. For how much amount? 9,000. Employer's contribution to the statutory provident fund is also 9,000 rupees. That is totally exempt from tax. Interest credited to the fund is how much? 4,000 rupees, which is given in point number D. That is also totally exempt from tax. Point number 4, whether employee is retired? Yes, he has retired. Has he withdrawn from the fund at the time of retirement? Yes. How much amount he has received? 7,60,000. What is the treatment of lump sum amount received from the statutory provident fund at the time of retirement? It is totally exempt from tax. Yes, I have completed the discussion of case A. Is that very clear? Now let's move on to case B. Case B. Case B, if the fund is recognized the provident fund, then employees contribution 9,000 deduction will be allowed in section 80C. Employers contribution is exempt up to 12% of salary. Excess is taxable. What is 12% of salary? Salary equals to basic salary, DA recognized, turnover commission. What is the amount of basic salary? 20,000 per month multiplied by 3 months. What is the amount of DA? 6,000. Of that, how much is recognized? One third, that is 2,000. For 3 months, it will be 6,000. So basic salary for 3 months, 66,000. DA recognized for 3 months is 6,000. Turnover commission given the question is 0. So basic plus DA recognized 66,000. Of that 66,000 you take out 12 percentage. So you'll get the amount of 7920. So what is the amount of employer's contribution? 9,000. Out of that, how much will be exempt? 7920. So how much is taxable? 1080. Have you all understood this? Next, interest credited to recognized provident fund. How much is the amount of interest credited to recognized provident fund? 4,000. 4,000 is calculated at what percentage? 10 percentage. How much is the exemption? 9.5 percentage. So what is the amount of proportionate interest to the tune of 9.5 percentage? 3,800. Don't apply that 9.5% on the amount of 4,000. That 4,000 itself is 10 percentage. So 4,000 divided by 10 percentage, 4,000 divided by 10 multiplied by 9.5 will get you how much amount? 3,800. That 3,800 will be exempt. So what is taxable? 200 is taxable. Is that very, very clear? Okay. Is employee retired? Yes. Has he withdrawn money from the recognized provident fund? Yes. How much? 7,60,000. What is the treatment of that 7,60,000? That is exempt from tax, provided one condition is fulfilled. What is that condition? Employee should have rendered services for 5 continuous years. In the absence of specific information in the question, we will assume that 5 years of continuous service condition is fulfilled. So amount withdrawn by the employee from the recognized provident fund 7,60,000 at the time of retirement will be totally exempt from tax. So 7,50,000 will be exempt. Is that very, very clear? Now let's move on to the last part of our discussion, that is case number C. What if the provident fund is unrecognized provident fund? Employee's contribution is 3,000 to 9,000. Can he claim deduction under section 80C? No, he can't. Deduction will not be allowed. Employer's contribution is 3,000 per month into 3 months, 9,000. Will it be exempted? No, it is taxable. But when it is taxable? Not while you are doing the job. When you retire, when you withdraw money from the fund, at that point of time it will become taxable. While you are doing the job, that fund is not traceable. So in the current year, for 3 months he has done the job. During those 3 months, the fund was not traceable. So employer's contribution 9,000 is not taxable. Interest credited to the fund, that is not taxable while you are doing job. It will become taxable when you retire. So 10,000 interest, 4,000 interest. 4,000 interest is not taxable. Now the question is whether the employee is retired. Yes. Has he withdrawn money from unrecognized provident fund? Yes. What is the amount withdrawn? 7,60,000. That 7,60,000 is required to be bifurcated in 4 parts. See this. Do you recollect? $7,60,000 is the amount withdrawn from the unrecognized provident fund at the time of retirement. That includes an employee contribution of how much? What is the amount of employee contribution? Kritika madam, wait for some time. What is the amount of employee contribution? 340. So this 340 is not taxable. What is the amount of employer contribution? 330. This 330 is taxable under income from salaries. What is the amount of interest on employee contribution? 46,000. This is taxable under IFOS. What is the amount of interest on employer contribution? 44,000. This is taxable under income from salaries. So what is taxable under income from salaries? 330 plus 44, that is 374. And what is taxable under IFOS? 46,000. Have you understood? Yes or no? Now last two sentences. I will be now telling only last two sentences in connection with this question. Current year, what is the amount of employees contribution? What is the amount of employees contribution to provident fund in the current year? 3,000 to 9,000. Don't you feel that 9,000 is part of 340? Don't you feel that 9,000 is part of 340? Yes. We are not levying tax on 9,000 also. We are not levying tax on 340 also. 340 is nothing but accumulated amount over a period of time. Employees contributing 3,000 every month. So over a period of time, 3,40,000 is accumulated in this account as employees contribution. This 340 is not taxed. Why it is not taxed? Because while calculating income from salary in the past years, what might have been taxed is gross amount of basic salary. Na? From that gross amount of basic salary itself, employees contributed money to the provident fund. So that is already taxed. Therefore, it is not taxed right now. Next, what is the amount of employers' contribution in the current year? In the current year, employers' contribution is how much? 9,000. Yes, Sarvana, yearly basis gross amount is taxed. In the current year, employer contribution is 9,000. Don't you feel that 9,000 is part and parcel of 3,30,000? That 9,000 is part and parcel of 3,30,000. If you levy tax on 330, that 9,000 is automatically made taxable. That 9,000 is automatically made taxable. Yes or no? What is the amount of interest credited to the fund in the current year? 4,000. That is part of this 46 plus 44. Interest credited to the fund in the current year, 4,000. That is part of this 46 plus 44. Because that interest is on employee as well as employer, both contribution. So that interest is also getting taxed here. Is that very, very clear? Yes. So we have completed our discussion with respect to question number 2. Question number 3 is given to you as homework. I am starting with gratuity. See, provident fund is one of the retirement benefit. Provident fund is one of the retirement benefit. The way provident fund is the retirement benefit, similarly, gratuity is also a retirement benefit. The word gratuity is derived from the word gratuitous. You should be always gratitude towards everything. See, I'm gratitude towards this coaching class, this mic, this camera, everything, because everything is helping me. So, in olden days, people used to work with a same organization for a very long span of time. And when the employee used to retire, employer willingly used to pay money to the employee, saying that keep this amount 5,000 with you. It will be helpful. It will help you in your retirement. So willingly, employer used to pay some amount of money to employee at the time of retirement, because people, nature of old people was like that. They always had a lot of gratitude toward their colleagues, etc. Slowly business went on a large scale. There was a lot of competition, and then people stopped making payment to the employees at the time of retirement. So government came out with the Payment of Gratuity Act 1972. In the year 1972, government came out with the Payment of Gratuity Act 1972, wherein government said that it is mandatory for employer to pay gratuity to employee. See, thanksgiving na, if I say you thanks 100 times na, your stomach will not be filled na. It needs food. Similarly, if an employee has worked with a particular organization for 30-40 years time, he has devoted 40 years time out of his life to your organization. Definitely you should be thankful. But how should you showcase or display your thankfulness to the employee? By giving money. Don't show him a smile. Just by saying thanks, nothing works out. You have to give money to him. So Government of India came out with Payment of Gratuity Act 1972, wherein government said that every organization which has hired 10 or more persons, every organization which has hired 10 or more persons, to Payment of Gratuity Act is applicable. And if the employee is rendering services for minimum 5 years now, then it is compulsory for the employer to pay gratuity to employee. So gratuity is nothing but amount paid by the employer to the employee to show his gratitudeness, show his thankfulness. Employer is paying amount to employee to show his thankfulness. But now this kind of payment is mandatory. Now this kind of payment is mandatory. So this gratuity which is received by employee from the employer, what is the tax treatment? That is what we need to understand. So gratuity means a payment made by employer to employee in appreciation of services rendered by the employee. This gratuity, from the point of view of taxation, we can say that it is divided in two categories. Gratuity received while in service. Say for example, you are doing job and you have performed exceedingly well. So for appreciating your services, your employer has given you gratuity while you are in a job. If you have received gratuity while you are in service, that gratuity is totally taxable. That gratuity is totally taxable for government as well as non-government employee. For everyone, this is taxable. But if you have received gratuity at the time of resignation or death or retirement, if you have received gratuity at the time of resignation or death or retirement, then we divide this in two parts. We will ask you a question whether you are a government employee or whether you are other employee. Other employee means non-government employee. If the government employee is receiving gratuity at the time of retirement, that is totally exempt from tax. See, while you are doing job, while you are rendering services, if you have received gratuity, that is totally taxable irrespective of whether you are a government employee or non-government employee. But if you have received gratuity at the time of retirement, if you are a government employee, that gratuity is totally exempt from tax. What if you are a non-government employee? Then we will ask you one more question. Are you covered by Payment of Gratuity Act or you are not covered by Payment of Gratuity Act? When can we say that you are covered by Payment of Gratuity Act? When you are working with an organization which has hired 10 or more employees. If you are working with an organization which has hired 10 or more employees, then we can say that you are covered by Payment of Gratuity Act. And if you are working with a small organization which has hired less than 10 people, Payment of Gratuity Act is not applicable to them. And you retired from that organization, still your organization paid you gratuity. In that case, we say that you are not covered by Payment of Gratuity Act. So in case a non-government employee is receiving gratuity at the time of retirement, for giving him exemption, the first question which we should ask to him is whether you are covered by Payment of Gratuity Act or whether you are not covered by Payment of Gratuity Act. Government says if he is covered by Payment of Gratuity Act, we will give him more exemption. If he is covered by Payment of Gratuity Act, we will give him more exemption. If we give him more exemption, his taxable amount will be less. His taxable amount will be less. His tax liability will be less. If he is not covered by payment of gratuity act, then we will give him less exemption. If we give him less exemption, his taxable amount will be more, his tax liability will be more. Have you understood this much? Yes? Oh, yes or no? You have to respond. If you have not understood, say no. It is not a crime to say no. Okay. So non-government employee receiving gratuity at the time of retirement, they are divided into two categories. Those who are covered by payment of gratuity act, those who are not covered by payment of gratuity act. Those who are covered by payment of gratuity act, to them will provide more exemption. Those who are not covered by payment of gratuity act, to them will provide less exemption. More exemption means less tax, and less exemption means more taxable amount, more tax. So let us now understand this in detail. Exemption is provided in section 10 clause 10. Exemption in both the cases, whether you are covered by payment of gratuity act or not covered by payment of gratuity act, exemption in both the cases is lower of following three amounts. So we will calculate three amounts, then we will select whichever is lower. Whichever is lower will become the amount of exemption. Amount number one is actual amount received. What do you mean by actual amount received? Amount received by you from your employer, that is nothing but the actual amount received. Amount received by you from your employer, that is nothing but the actual amount received. Point 2, there is a maximum limit for exemption. We can give you maximum exemption. To what extent? 20 lakh rupees. Deva is asking me whether applicability is enough or we have to register with the payment of gratuity act. No. There is nothing called as registration. By default, payment of gratuity act will be applicable if you have hired 10 or more persons. If you hire 10 or more persons, that's all. By default, gratuity act has been applied to you. So if your employee retires, you have to pay him gratuity. Registration is not required. I am not the expert of law, but still, whatever I am knowing, I am answering. Yes, shall I proceed? So if you are a non-government employee receiving gratuity at the time of retirement, you can claim exemption. Exemption depends upon whether you are covered by payment of gratuity act, not covered by payment of gratuity act. In both cases, exemption is lower of following two amounts. Lower of following three amounts. Out of three amounts, now first two amounts are common. First two amounts are same in both the cases. First amount is actual amount received, actual gratuity amount received at the time of retirement. Second amount is maximum limit, which is 20 lakhs. See, in case of entertainment allowance, deduction, section 16 clause 2, maximum limit for deduction was 5,000 per annum. Here it is 20 lakh rupees. So first two amounts are common in both the places. I told you that if you are covered by payment of gratuity act, your exemption will be more. If you are not covered by payment of gratuity act, your exemption will be less. But if you just look at the first two amounts now, you feel that same amount of exemption is given. The third amount will make a difference. This third amount will make a difference. What is the third part? Third part says, third part for covered by payment of gratuity act, equation is last drawn salary into 15 upon 26 into period of service. I am just reading. I am not explaining. Don't worry about that. Last drawn salary into 15 upon 26 into period of service. And on the right hand side, employee not covered by payment of gratuity act. Third part is average salary into 1/2 into period of service. Average salary into 1/2 into period of service. Now the point is, we'll try to understand this part by part. First part it says last drawn salary. Here right hand side first part says average salary. In that also we'll bifurcate. What do you mean by last drawn? What do you mean by average? Last drawn means salary of the month immediately preceding the month of retirement. If you retired on say 15th August, then you take the salary of the month of July.
What if you retired on 31st August? Then also you take the salary of the month of July. Last drawn salary means the salary of the month immediately preceding the month of retirement. What do you mean by average? Average means you have to take up total of some amounts and divide by total of number of amounts. So, average means average of 10 months. Which 10 months? Average of 10 months salary immediately preceding the month of retirement. Means, for example, you retired on 15th August. Then you ignore the month of August, irrespective of date of retirement. Whether you retire on 15th August or whether you retire on 31st August, you ignore the month of August. Ignore the month of August, ignore the month of retirement and go backwards. Go backwards, find out which are the 10 months. So you retired in the month of August, you ignore the month of August, you go backward and find out 10 months. Those 10 months are July, June, May, April, March, February, January, December, November, October. So ignore the month of retirement, go backwards, find out which are those 10 months. You take the salary of last 10 months, add up those amounts and then divide it by 10. You will get an average salary. So what is the benefit? What is the benefit? See, if during the last 10 months there was an increment in the amount of salary, during the last 10 months, if you are promoted or there was an increment in the amount of your salary, then your last drawn salary will be more. But if you take out the average, your average will turn out to be less. Did you understand something? If there was an increase in the amount of salary during the last 10 months, then your last drawn salary amount will be more. But if you take out the average of last 10 months, that average will turn out to be less. Did you understand this sentence? Yes, yes. So moral of the story is, those employees who are covered by the Payment of Gratuity Act will get more exemption, and those employees who are not covered by Payment of Gratuity Act will get less exemption if there is a change in the amount of salary, if there is an increase in the amount of salary in the last 10 months. Next part says salary. Next part says salary. See, in house rent allowance, what do you mean by salary? For the purpose of computation of exemption, salary equals to basic salary, DA recognized, turnover commission. Basic salary, DA recognized, turnover commission. For the purpose of employer's contribution to recognize the provident fund, exempt up to 12% of salary, excess is taxable. What do you mean by salary? Salary equals to basic salary, DA recognized, turnover commission. Same is the definition for those employees who are not covered by Payment of Gratuity Act. Those who are not covered by Payment of Gratuity Act, same is the definition of salary. Salary equals to basic salary, DA recognized, turnover commission. But for those who are covered by Payment of Gratuity Act, definition is slightly different. Salary equals to basic salary, DA recognized plus DA ordinary. Plus DA ordinary. And turnover commission is not required to be taken here. So, see, every person will not get turnover commission. Only those who are working in the sales team may get turnover commission. For example, I am retired. Manoj is also retired. I have retired. Manoj is also retired. Now say for example, I am covered by Payment of Gratuity Act, Manoj is not covered by Payment of Gratuity Act. My DA is ordinary, Manoj's DA is also ordinary. Since he is not covered by Payment of Gratuity Act, that ordinary DA will be ignored. But I am covered by Payment of Gratuity Act. In my case, you will have to consider even ordinary DA. So in my case, salary will be more the salary, more the exemption. But in case of Manoj, since he is not covered by Payment of Gratuity Act, the ordinary DA should be ignored. The moment you ignore that ordinary day, na, salary amount will be less. If that is less, exemption will be less. Have you understood this? Yes or no? So, I have explained you the meaning of salary or definition of salary, what all things are required to be taken into salary. Now it is the next part, second part of the equation. Left hand side it says 15 upon 26, right hand side it says 1 upon 2. What is 15? 15 is half month upon 26. What is 26? 26 is full month. Full month excluding 4 Sundays. 15 is considered as half month. Then what will be considered as full month? Is 30 na? But from 30, I deduct 4 Sundays, holidays. So it is 26. 15 upon 26. And on the right hand side, it is 1 upon 2. 1 upon 2 is nothing but 15 upon 30. 1 upon 2 is nothing but 15 upon 30. So instead of 15 upon 30, we are writing 1 upon 2. 15 upon 30 means half month upon full month. 30 means excluding holidays. Sorry. 30 means including holidays. So on the left hand side, we are taking 26, that is excluding holidays. On the right hand side, we are taking 30, that is including holidays. So you may ask a question, sir, why such thing is done? Because we want to give more exemption to those people covered by Payment of Gratuity Act. Any amount multiplied by 15 upon 26 will be higher na, as compared to any amount multiplied by 15 upon 30. You take any amount, 1 lakh into 15 upon 26 will be higher as compared to 1 lakh into 15 upon 30. So intentionally we have done this to give more exemption to those people who are covered by Payment of Gratuity. Have you understood second part of the equation very clearly? Yes. So now let's move on to the last part. Let's move on to the last part, and that last part is period of service. Period of service. Period of service means period starting from the date of joining the job up to the date of retirement from the job. Period of service means period starting from the date of joining the job and ending at the date of retirement. This period you are required to calculate. This period you have to calculate in number of years, number of months, number of days. How many months you have worked, how many years you have worked, how many days you have worked. For example, you can get a period that you have worked for 15 years, 9 months and 9 days. So you have worked for 15 years, 9 months, 9 days, and now you have retired. You can, or maybe you can get, you have worked for 15 years, 5 months, 5 days. Or maybe you have got 15 years, 6 months exactly, 0 days. Or maybe you have got 15 years, 6 months, 1 day. So you have to calculate what? You have to calculate your period of service. You have worked for how many years, how many months, how many days, that you have to find out. This is called as period of service. This is called as what? This is called as period of service. See, you cannot multiply. Should we exclude holidays? No. No. We should not exclude holidays from period of service. See, while you calculate your age, if I ask you what is your age, will you exclude holidays? If I ask you what is your age, will you exclude holidays? No, na. Similarly, here also, you should not exclude holidays. Now tell me, can you multiply any number by 15 years, 9 months, 9 days?
Huh? Can you get me the answer? 1 lakh multiplied by 15 years, 9 months, 9 days is how much? Is it possible? No, na. So we have to round up this. We have to round up this number of years. So rounding of rules are different. If you are covered by payment of gratuity act, if you are covered by payment of gratuity act, and if you are not covered by payment of gratuity act, rounding of rules are different. So this months and days now are required to be rounded off to year. 15 years, 9 months, 9 days will be rounded off to 15 years. 15 years, 5 months, 5 days will be rounded off to, 15 years, 9 months, 9 days will be rounded off to 16 years, not 15. 15 years. 15 years, 5 months, 5 days will be taken as 15 years. 15 years, 6 months, 0 days should be taken as what? It is not like mathematics that 15.5 will become 16. No. 15 years, 6 months, 0 days will be considered as 15 years. So don't think that it is like mathematics. 15 years, 6 months, 1 day now will be taken as 16 years. So part of the year more than 6 months. Listen to me carefully. Part of the year more than 6 months will be taken as full year. Part of the year more than 6 months will be taken as full year. So where it is more than 6 months, it is more than 6 months in the first case and the last case. So that should be taken as full year. So that those are taken as 16 years and remaining 2 up to 6 months will be taken as 15 years. Is that very, very clear? Last point. What about those who are covered by not covered by payment of gratuity? For them, it should be always taken as 15 years. In other words, part of the year will be totally ignored. Part of the year will be totally ignored. Now, say for example, I am covered by payment of gratuity act, you are not covered by payment of gratuity act. I have retired after working for 15 years, 9 months, 9 days. You have also retired after working for 15 years, 9 months, 9 days. In my case, they will take 16. In your case, they will take 15. In my case, since they are taking 1, 6, 16, my exemption will be more, my taxable amount will be less. In your case, since they are taking 1, 5, 15, your exemption amount will be less, your taxable amount will be more. Have you understood this? Yes or no? So this is the way in which period of service will be taken up. So I have explained you part by part, and every time I have proved that those people who are covered by payment of gratuity act will get more exemption. So their taxable amount will be less. And those who are not covered by payment of gratuity act will get less exemption and their taxable amount will be more. And whatever I have explained you, everything is written here. See what is the meaning of last drawn, what is the meaning of average, what components are required to be taken into salary, and how to round up this. Everything is written here. Is that very, very clear? Yes. Last point I am taking up, not important from examination point of view, only for your knowledge I am telling this. In case of entertainment allowance, government employee meant to central government and state government employees. In case of provident fund, government employee meant central government, state government and semi-government employees. What do you mean by government employee in case of gratuity? I have given the definition here. For the purpose of gratuity, government employee means central government, state government and local authority employees. Central government, state government and local authority employees. This will be considered as government employees for the purpose of gratuity exemption. Is that very, very clear? With this, section 10, clause 10 gratuity comes to an end. So tomorrow morning when we meet, we would start with the practical questions on gratuity. One question, one concept, one question. Tomorrow we'll start with what? Practical question on gratuity.